for these elections. All of this makes it very much a kind of center versus the incumbents in Bengal, a kind of political fight in many people's perception. And that's the reason why it's very important. Remember that Bengal, beyond all of this, is hugely important to the BJP. They came pretty close to a real upset in the last election in 2021. And therefore, this time they've got a real point to prove. They're depending on, increased anti-incumbency. What was then a very, very personal fight has become largely about issues this time, but that doesn't mean it hasn't lost its kind of very personal flavor where it's framed as Modi versus Mamta even at this time. So that central flavor to this election in Bengal is unignorable and undeniable. Move down south to Tamil Nadu. This is a state where literally the incumbent chief minister has pitched the battle as a center versus state fight, whether it is delimitation, whether it is state contributions to the national exchequer, taxes, etc. It's been a north-south divide that's been brewing over the last few years. Remember that the DMK has never scored a successive win in 2 elections back to back. You've got the NDA trying to create a larger footprint inside Tamil Nadu. You've got the Prime Minister's own sort of special interest and special love for Tamil Nadu. We saw that in the run-up to the Lok Sabha elections as well. And that makes the sort of central tadka or the flavor in Tamil Nadu also similar to Bengal, very, very undeniable. These are both states with very strong local identity, local politics, distrust of the outsiders, framing the outsiders as those who want to come and, disrupt the traditional political realities of those states. So the BJP, with a point to prove, treats every election like a do or die battle. So it stands to reason that all of these states have a great amount of importance from that national perspective. So Bengal and Tamil Nadu are going to be very, very interesting.
And we'll be watching all of the action. Thank you so much for that, Shiv. Here's the thing. This report has gone viral, which says that you will see fuel prices at the pump go up $26-27 after the elections. I think they may have preempted it a little bit because I don't know if anyone can come and now raise prices to that extent in any case. But now that the story is out, one doesn't know.
Rumors about prices increasing for fuel and Diet Coke.
Diet Coke is just not there. Forget about price increase because of no aluminum cans, I suppose. We'll definitely need one after this show, but that's all the time we have on India Market Open. From all of us who put the show together, thank you for watching. Stay tuned. Your questions answered next on Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit.
Welcome. You're watching NDTV Profit. I'm Mahima Vachharani, and Havells India is in focus on the back of its Q4 earnings. For sure, a beat in terms of where growth in cable stands. Lloyd's and electronic consumer durables, of course, did see a drag, and this is on account of Q4 not being a very strong season for consumer durables as a whole. And macro outlook, of course, will be something that we'll be watching out for in terms of future demand considering competition. But to take this conversation forward, we're joined by Anil Rai Gupta, who's the Chairman and Managing Director at Havells India, joining us now. Mr. Gupta, always a pleasure speaking to you. My first question is with regards to cables and wires. That's one of your strongest growing segment this quarter. Just want to understand, considering the competition clearly rising, how sustainable do you think this growth is going forward in FY27?
Thank you, Mahima. I think cables and wires is not only the demand is strong, but also the fact that Havells has continued to invest in the capex cycle in the last couple of years, which has given us good capacity for our industrial cables business, which is underground cables. There we see a fast growth in the entire year in the fourth quarter last year. In fact, the stronger segment, which is the largest segment amongst cables and wires, which is the domestic wires business, did see a revenue flattening in the fourth quarter because of the fact that there were raw material price disruptions and destocking of the channel during the first half of the quarter, and also a high base over last year. So I think overall it's a mixed performance, and we look forward to the coming year.
With regards to Lloyd's as well as your electronic consumer durable segment, of course, Q4 is not the strongest quarter, right, because of delayed summer, etc. But now that summers have really picked up, how are you seeing the traction of demand coming in for both of these segments?
I think last year was a dampened year because of this summer season. The inventory was built up at the channel. The consumers were not really picking up the material, and the industry faced huge headwinds in this business. I think going forward, fourth quarter was not really a marker for this because there were channel inventories. But I think going forward in the first quarter, we should see a stronger summer as compared to last year, which would mean a higher growth in this business as well.
Mr. Gupta, with regards to your raw materials, I believe that they will have inflation because of this entire West Asia conflict. Just want to understand as to how much of an uptick have you seen in terms of raw material inflation, and how much of that will be impacted in Q1 and Q2? Because I believe that to a lot of extent price hikes are going to cater to it. But what is it looking like? What is the scenario looking like right now?
Yeah, I think we are undergoing this challenging period because, we started off the calendar year January with already some raw material hikes in copper, aluminum, silver. But with this West Asia conflict, the other products like petroleum, which directly affects engineering plastics, they also came under purview. And because of this, price hikes are imminent, which has been going on and it's continuing. And I think while it may affect, because sometimes the entire cost cannot be passed on, so it may affect the margin, but also I think what we are more concerned about is how it impacts the demand. So we're all looking forward to a reasonable conflict resolution in the West Asia market for markets to settle down and the demands to become normalized in the coming quarters.
Got it. Mr. Gupta, overall, if you take a look at the sales growth for FY26 as compared to FY25, it's been a tough year, right? It's seen a growth of around 3 to 4%. Going forward in FY27, considering demand, considering competition, considering this impact of West Asia conflict as well, what are the growth projections internally that you would have discussed for top line as well as bottom line coming in?
Well, I think last year, you're right, the growth was in low single digits also because of the fact that our major portfolios of air conditioners, fans, air coolers, they actually saw a negative revenue growth in the last year. So going forward, I think this year looks very positive from all points of view, but also from a numbers point of view. If you see, we see price hikes here. We see a good summer, a low base last year. So frankly, even if there's a decent growth, I think, we'll have to look at 2 years as a whole or CAGR. So we are expecting much better growth in the coming year because of these factors what I talked about, but our continued investments in brand, distribution, product innovation. So that's the real key for us, for our growth drivers in the coming year.
Got it. And for margins, they'll be the same range as they were in the last 2 years?
So we strive for, normalized margins, increasing market shares. But as I said, this West Asia conflict is something which is, I would say very fast, but also temporary, hopefully. So let's see how the margins pan out. But our strive will be to, recoup our margins through our strong brand innovation and distribution.
All right, Mr. Gupta, thank you so much for being so candid with your answers and of course taking out the time and speaking with us at NDTV Profit. Hello, welcome. You're watching Ask Profit here at NDTV Profit. You just heard the management of Havells India. Let's try to pull up the chart and see as to how it's doing in trade today. Yesterday, it did see an uptick post announcing its earnings, but did, of course, fall off from its day's high point in just a bit of time. And today, it's seeing a knock of almost 6% But that's with regards to where, of course, Havells go. Let's take a quick look as to how the markets are also doing. Let's try to pull up the benchmark, the Nifty 50, as well as the Bank Nifty. The Nifty 50 right now is trading with cuts about 0.6% off from the day's low point, but still trading around 140 points lower. The Bank Nifty also seeing a downtick of around 0.8%. Let's try to pull up the Nifty 50 heat map to see as to what are the counters that are putting pressure when it comes to the entire Nifty 50 chart. There's Trent, which is trading 3% lower, probably seeing profit booking in trade today. It's run up almost 30% in the past 1 month. Shriram Finance also taking a knockdown by about 2.6%. Tech Mahindra, M&M, Bajaj Finance, Bajaj Finserv. So both Bajaj Twins also not doing well in trade today. All of these down in that range of 2% each. But on the flip side, Dr. Reddy's is something which is flying in trade, up 7%, followed by Cipla. So pharma as a whole is doing very well in trade today. Geo Finance, even Sun Pharma is up by about 1%. ONGC, Nestle are some of the other counters that are doing fairly well. Let's try to pull up the sectoral heat map to take a look at the sectoral picture. At this hour, you have Nifty Pharma, like I said, up 2%, followed by something like the Nifty Energy doing fairly well. But Auto taking a knock, down 1.8%. Realty also seeing profit booking today, down 1%. Consumption as well as PSU banks also seeing profit booking. So that's with regards to where the sectoral indices are concerned. The broader end of spectrum, also let's try to pull up the mid cap 150 and the small cap 250. Not that bit of a pressure coming in on both the mid cap 150 and small cap 250 as compared to the benchmarks. But still, the small cap 250 down by about 0.15% and the mid cap 150 down by about 0.2%. But with that, let's start taking all your stock related questions, and to answer them, we are joined by Kush Bora, founder of kushbora.com, and we'll be soon joined by Shahina Mukaddam. In fact, we're joined now by Shahina Mukaddam, the independent market expert. The first question that's coming in from Archana, who's writing us from Mumbai, asking about Pine Labs, whether an entry into this counter makes sense right now or not. Shahina, very good morning to you. I'll come to you on this one. Your view on Pine Labs?
Well, I think the overall IT segment and especially the small cap is not really doing too well. So I would suggest that better opportunities available rather than Pine Lab as of now.
Right. The next query is coming in from Satyan and it's on Som Distilleries. He has bought few shares at a price of around 150. He wants to know whether should he continue to hold on to this counter for the next 6 months. Any view on this, Kush?
First of all, very good morning, guys. I think you said the buy price was 150, right? I mean, still some distance away. The trajectory is northwards, so I would suggest a hold with a stop loss around the 88-89 zone. But I think you should start exiting at slightly higher levels of about 110 and 125. 150 will perhaps take some time coming.
All right, viewers who are tuning in, you can also give us a call on the number that's flashing on your screen up there, or send us your queries on the WhatsApp number. The next one is coming in on Trent. The buying price of our viewer is 4320 and 18 is the quantity that he or she has bought. Wants to know the outlook for this counter in the next coming days. So looking from a short-term perspective, Kush, profit booking definitely on the cards for this one today. Would you recommend to continue to hold for a few more days after seeing that 30% run up in the past 1 month?
Yeah, so I would suggest holding on to this one. The reason being that, yes, there has been a run-up, but the stock is seeing good volume accumulation over the last few sessions. Now, one, because of profit booking, two, there was a resistance around the 4,500 mark of the 200-day moving average that is also playing up. But from a medium to long-term perspective, what's happened is that there's a falling trend line resistance that the stock has broken. So there's a good possibility that once this profit booking is over, the stock could resume its upward move. And even now with this kind of dip, the stock is not too far from the buying price. So my suggestion, continue to hold. Keep a stop loss slightly deepish, close to the 4150 mark, and continue to hold.
Okay, the next query is coming in from Abdul Rashad from Kerala, and it's on Cupid. He wants to know whether this is the right time to enter Cupid for the next 6 months. Any stop loss, any target that you could suggest on this, Kush?
Yeah, so my issue with this stock is that, once it starts to run, it gets overheated very soon. And that's the case even now. We did see a sharp run up on this stock in the last just about month or so. From 77, it's gone up to about 112 right now. So overheated. I wouldn't suggest an entry now. If you see the primary trend for this one for the last couple of years has been phenomenal. So yes, you should buy it on declines. Maybe close to the 95 to 100 support zone. You could consider an entry. Right now, no.
Okay, all right. The next one that we have is from Mohit, who's asking us about a couple of names, but I'll take Gale from his portfolio. He wants to know whether he can continue this continue holding this from a long-term perspective. Shaina, your view on Gale?
Well, from the long-term perspective, it is fine, but I think in the shorter term, it will go through some issues because of one, availability of gas, and two, the pricing also. We really don't know what would be the exact impact on profitability. So I would suggest that it is better to wait to buy Gale. And if you're holding, I would suggest it is better to sell at least half the quantity as of now and review after 3 months.
Okay. The next query is coming in from Vijay from Chennai. He wants to know the short-term target on Indigo. Kush, any view on Indigo?
Well, there is a recovery, but I don't think it's it's a meaningful one at that. It's more of a recovery from the oversold territories. The stock was anyway hammered, for even before the war and the issue started. My suggestion from a near-term perspective, the recent swing highs of 47, 47.50, those should be your targets. If that is taken out, the stock could move higher. But right now, the volume action doesn't really confirm that. So from a short-term perspective, 47, 47.50, these are your targets.
Okay, all right. So that's the view coming in on Interglobe Aviation. The next one that we have is from K. Parthasarathy, who's writing us from Chennai, asking about IRCTC. He's bought 80 shares at the level of 760, sitting on a loss of around 30% right now. Wants to know whether to hold, add or sell more from a long-term perspective. Shaina, your view on IRCTC?
As of now, I think it's a hold because, we are likely to see good numbers going forward. The number of, the Vande Bharat trains that are coming on. And I think this will increase their revenues over a period of time. Also, their catering business is doing pretty well. So as of now, I would say it's a hold.
Dilip from Kolkata has few shares of Voltam Transformers. He wants to know whether should he add more from long-term perspective. Shaina, any view on this?
Voltam Transformers, I would suggest that he can add at current levels. I believe in terms of valuations, it is reasonable. It's a small cap company. And I think you can add, but don't add all at one time because of the overall market is a bit volatile. So add it in a staggered fashion.
Okay. The next one that we have is coming in from Kishore, who's writing us from Hyderabad, asking about Siemens Energy. He's bought 49 shares at an average price of 2,700. Wants to know if he can go ahead and add more. At this point of time, he wants to know the price at which he can average. He wants a technical view on this one. Kush, I know you would not recommend averaging, but your overall view on the charts for Siemens Energy?
Not bad at all. The stock's actually seen a very good recovery, a very good revival. It's broken out above that 3,000 resistance zone and then gaining strength from there on. Also the 200-day moving average close to that mark, that was a resistance. So multiple technical events, for the positive working for Siemens Energy. My suggestion, you should continue to hold. As far as, adding more is a concern, maybe on slight declines close to the 3,100 mark is where you can consider. It has a reasonable support. Broadly, the 3,000 to 3,100 mark will act as a support. But yes, if you do want to add, that's the zone where you can consider adding some more.
Okay. All right. Now, Godrej Industries has been in focus. Just to explain the corporate structure, it holds around 23.7% in Godrej Consumer Products, 44.8% in Godrej Properties, 64.8% in Godrej Agrovet. In fact, Pirojsha Godrej takes the helm of Godrej Industries Group at one of its most pivotal moments. In an exclusive chat with NDTV Profit's Nisha Podar, he sets a 5-year target of building 5 lakh crore market cap powerhouse and scale it further. Here's a snippet of that conversation.
First of all, you of course have big shoes to fill. What is the ethos that, or the legacy of Godrej that you are going to carry forward, and what are your aims and targets for the new vision?
Yeah. Well, thank you. Of course, it's an exciting opportunity for the group. I think we're at what we think is a fairly unique moment where we can celebrate both being a 129-year-old group with a founding in 1897, but also in our new format as the Godrej Industries Group, just a 2-year-old group since the restructuring of the Godrej Group. So we want to try to bring together the best of those things, the strength and confidence that the legacy of the brand gives us, but also add to that the kind of youth, ambition and energy that we hope to bring to bear through our new structure. Right. So I think, the values that the group has always stood for that we want to take forward are inspiring trust first and foremost. I think the group has always stood for a certain way of doing business, and we want to make sure that we celebrate that, we build that into the culture on an ongoing basis, and that we never forget that part of where we've come from. We also want to be very focused on creating delight. We think, if you look back both to the recent past, but the further away past, there are many stories and many examples of the group really doing something very innovative, creating true delight for our customers, and we really want to take that forward. And last but definitely not least, we want to be very bold. The group has had a tremendous track record, a tremendous record of innovation and progress at all times. And we want to make sure that the brightest period for the group lies ahead. And think boldly about the opportunities and the possibilities to take all the tremendous advantages we enjoy and carry them forward to this next period.
I'm glad that you stated all of that, because it's not easy to be building sustainable businesses over 100 years. Very few conglomerates have managed to do that, Pirojsha. So therefore, the big task that you have ahead in the new identity of Godrej. But of course, you targeted the 5 lakh crore rupees of market cap in 5 years from now. You're just under 2 lakh crore rupees at the current moment. So what are the growth areas? What are the plans in the new version that you are going to really focus on for the business?
There's a lot of exciting opportunities. So at the Godrej Industries Group level now, we have 6 different operating businesses in sectors as varied as real estate, FMCG. Our agri-business in and of itself is a conglomerate with 6 or 7 different verticals under it. We also have in the unlisted space some very exciting new businesses like Godrej Capital, our financial services play, which is our youngest business, just started about 5 years ago, has seen a lot of progress in that period, but we have big ambitions for that business. We also have a legacy oleochemicals business called Godrej Chemicals that we're trying to put into the direction of becoming more of a specialty chemicals player. Quite excited about the opportunities there. And lastly, we have a business called Godrej Ventures that has a film studios business, a managed office platform, as well as a core office in partnership with Godrej Properties. So these 6 businesses tapping into almost all parts of the country's economy, whether you look at the agri economy or the urban economy through real estate or the financial services opportunities. So really quite optimistic about the possibilities in each of these. We've had many notable successes in recent years. If you look at the last 5 years, cumulatively these 6 businesses have delivered a compounded sales growth of over 20%, also a compounded earnings growth of over 20%. So we want to sustain that growth, make sure earnings per share continues to grow at over 20%, add to that an expectation that each business individually delivers a return on equity of at least 18%. Bringing together that growth and efficiency is what we think can unlock this value and take us from where we are today to this 500,000 crore aspiration. We also think there's an opportunity over that period to list a couple of additional businesses.
All right, so that was an interesting conversation with Pirojsha of Godrej Industries, of course. But let's start taking your stock-related queries as well. The next one is from Saurabh Goyal. He's talking about Garden Reach Shipbuilders. He's bought it at the levels of 2375 and wants to know whether he can continue to hold or book profits at the current levels. Kush, what would you recommend?
Yeah, so I think he's bought it at fairly interesting levels. The stocks had a good run. My suggestion would be to book partially, but continue to hold. The stock's got good momentum, good volume action. There is a golden crossover also, about to occur. So technically, it's got a few things going for it. However, resistances around this 2875, 2900 mark. Multiple times the stock has retraced from there. So you don't want to be, still holding on if the stock slides yet again from those levels. So my suggestion: book partially, hold the rest with a stop loss at the 2725 mark.
Right, the next query is coming in from Hireen from Surat, and he's holding shares of Colgate and Devyani, currently sitting on a loss on both the counters. He wants to know whether should he continue to hold this further or sell. Shaina, any view on Colgate and Devyani?
Well, Colgate has been an underperformer if you look at it over a longer term period. I believe in FMCG, that is not my top pick. So as of now, I would switch from Colgate. And Devyani, I think QSR inflation has impacted their profitability to some extent, but with the consolidation happening, I believe Devyani could be something you could look to add, but add it at depths. Hopefully, the inflation over a period of time will come off. As of now, we are facing some issues because of raw material prices going up and other food prices also remaining reasonably high. So I would say you can add Devyani, but add it in staggered fashion and over a period of time.
Okay, all right. The next one that we have is from Amit, who's writing us from Dubai, asking about two sugar stocks, Dalmia Bharat as well as Praj Industries. He's saying that he's got 500 shares of Dalmia Sugar at 400 rupees. Wants to know the target price for the next 1 year. Kush, all of these stocks are flying in trade today, of course, on development coming in, but your view with regards to where charts go?
Never been a big fan of this space. There is a momentum that comes in, of course, sometimes news backed, but then it just fizzles out equally quickly. So my suggestion would be to be nimble footed on some of these names. However, that said, Dalmia Bharat has had a good run, continues to depict higher price action along with good volume action. So yes, you could continue to hold. I think the stock has enough and more momentum to go to about 460 to about 475 levels in months to come. So yes, you could continue to hold, but I would suggest a stop loss at the 385 mark. And like I said, you have to be nimble footed in some of these names.
Kush, the next query is again for you. It's coming in from Ramana from Bangalore. He's holding 500 shares of Bank of Maharashtra, bought at a price of 64. He wants to know whether should he book profit, hold or add more at the current level. Any targets or stop loss if you would suggest?
Yeah, so I think Ramana's perhaps been listening to us, especially on the morning show on Ask Profit as well, where we've suggested Bank of Maharashtra as one of the preferred picks in this space. The stock's done phenomenally well. What you're seeing right now is more of profit booking. 77 was a key resistance level for the stock of a rounding bottom formation breakout that came about. That acts as a support. So right now, I would suggest, even if it's not too far off, keep 77 as your stop loss. Given that your buying price is lower than that, this will act as a trailing stop loss and help you take some money off the table. So hold, but with a tight stop loss at 77.
Okay, all right. The next one that we have is on Maruti Suzuki. Mahalakshmi from Hyderabad has been holding 4 shares at the levels of 6,675 since 2021. So she's been a patient investor. She says that now she wants to go ahead and sell this and buy into something like a Hyundai or Ashok Leyland from a long-term perspective. Shaina, would you recommend that?
No, I would suggest continue to hold Maruti. The valuations, in fact, are quite reasonable. It's available just about at 20 times EV to EBITDA. In fact, if you see the capacity addition that they're planning over the next 3 to 4 years is pretty aggressive, and they've got good new launches. The question on Ashok Leyland also, I think Ashok Leyland should do reasonably well, but I would prefer Maruti over Ashok Leyland. So you continue to hold Maruti.
Shaina, as well as Kush, it's time for our rapid fire round. You both know the drill. I'll take up the first question, which is coming in from Arvind. Arvind is asking about Canara Bank. He says that he's bought 2,000 shares at levels of 161, and this is before the stock split happened, and wants to know whether he can continue to hold this from a really long-term perspective. Shaina, your view?
Yeah, it's a hold. They are expected to do pretty well, reasonable valuation.
Okay.
Arun from Hyderabad is holding few shares of RHI Magnesita at a price of around 110 rupees. Should he continue to hold for long-term, Shaina?
I'll pass the stock.
Okay.
Okay, the next one is on Thangamel Jewelry. V. Murli from Bengaluru has bought 150 shares yesterday at 4077. Kush, the momentum is still there on this one?
Yeah, the momentum is there, but it's seeing some profit booking for the last 3 to 4 sessions. So my suggestion would be, ideally you should put a stop loss, as in when you buy the trade. For now, I would suggest hold, but with a tight stop loss at 36.50.
Okay. Mr. Reddy is holding shares of Triveni Engineering around 329, bought at a price of 159. Should he hold or sell China?
He should hold it as of now. There's a lot of developments happening in that space.
iFinance is the other one. Ramesh from Bengaluru is holding 60 shares, bought at the levels of 130. Wants to know if he can continue to hold at this juncture. China, any view?
I didn't get the name actually.
iFinance. It's a recent listing.
Yeah, so I don't have any view.
Kush, enough data by any chance on the charts?
No, afraid not.
Yeah.
Okay, Soumya from Bangalore wants to know whether is it a good time to enter BSC. Kush?
Yes, have been fairly constructive on BSE for some time now. As far as the current entry goes, my suggestion would be to wait for a decline towards the 3350, 3400 mark and then enter.
Okay, Orion Pro Solutions is the other one. Suman from Kolkata is holding at an average price of 893 and 21 shares is what she has. Wants to know if she can hold or exit. Kush, your view?
You should continue to hold. Keep a stop loss at 835.
The next query is on Galaxy Surfactant for you, Kush. Jay Krishnan is holding few shares, bought at a price of 2,015 rupees. He wants to know whether should he continue to hold this counter for the next 6 months.
Yeah, about to break out, but volume action still not very encouraging. But yes, given the jump, you can hold stop loss at the 1740 mark.
Okay, the next one is on Aditya Infotech. Our viewer Sagar is holding more than 5,000 shares, is what he's saying. Can he continue to hold this from a slightly long-term perspective? Shahina, any view?
No, I don't have a view on this.
Kush, any view on the charts?
Yes, you should continue to hold. In fact, you can add more near the 2,000-2,100 mark as well.
Okay. Next query is on HDFC Life. Jivan from Hyderabad wants to know whether is it a right time to enter or could there be more correction to this counter. Shahina, any view?
I think there will be a bounce from here, in fact, for the overall sector. The sector has corrected. So it's a hold and a buy at any dips you get.
Okay, Wellspin Corp is the other one. Rajesh Maheshwari is holding 150 shares at an average price of 573. What's the short-term outlook for this one? Kush?
Wow, I think you should book profits at least partially right now in this one.
Next query is on Praj Industries. Somesh from Kerala is holding 150 shares at a price of 369. Any near-term targets on this, Kush?
First suggestion would be to book profits already overheated, and you can then continue to hold on to the rest of the quantity for about 435 and 455 kind of levels for coming weeks.
Okay, ITC Hotels. Vijay Kirti is bought at the levels of 199. 700 shares is what she's holding. Continue to hold from long-term perspective. Shahina, or shift to Tata Power?
She can continue to hold ITC Hotels. I think there will be a bounce over the next 6 months to 1 year from these levels.
Vijay Kumar is holding close to 10,000 shares of Vedanta, bought at a price of 708 rupees. Should he continue to hold or sell this counter, Shahina?
You should hold it. There's a split in the near term which will be positive.
All right, okay. So that brings us to the end of first rapid fire round. But time to slip into a very, very short break. We'll be right back answering all your queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
From the factory
factory floors of Guangdong to the policy corridors in Beijing. What is going to be China's next political, economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with me, Gauri Dwivedi.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call or send us your queries on our WhatsApp number that's flashing on your screen up there. The next question that we have is coming in from Mr. Mishra, who's writing us from Mumbai, holding 50 shares of IRM Energy, bought at the levels of 462. At this level, he wants to know whether to hold or sell. Kush, if you can try to pull up the charts for IRM Energy. Any view? It's a small company, 1100 odd market cap, but any view on this one?
Very honestly, this is not something that I track very actively. This is the first time I'm looking at the charts, but just a very quick preliminary view. Stocks actually run up quite a bit. It's already overheated, taking out the 200-day moving average. You might want to perhaps place a stop loss at the 270, 275 mark, but like I said, I don't have a in-depth study on this one. So take it with a pinch of salt.
Okay, a caller query coming in from Vizag. Radha, you can go ahead and ask a query.
Yeah. Hi, sir.
Hi.
Yeah. Okay, sir. I'm having the Sumitomo Chemicals long from the 200 shares of 530 average.
Okay.
So whether shall I average or what is the long-term and short-term view on this, whether my price will come or should I exit?
Okay. Shahina, any view on Sumitomo Chemicals? Should Radha add more shares to lower the average price, or should she exit?
Well, I think as of now you hold it because I think there is some bit of raw material price increases which could impact their profitability in the next couple of maybe months, a quarter, 1 or 2 quarters. So as of now, don't add, hold it, and then watch for the numbers as and when it comes to take a call. You review it later.
Okay, all right. The next one is coming in from Ashok, who's writing us from Andhra Pradesh. He says that, is it the right time to enter something like an Engineers India by booking profits in whatever counter he's holding, and wants to know, so he's already bought, my bad, he's already bought Engineers India at a price of 200 rupees. He's sitting on profits. Wants to know if he can shift to something like a Sai Silks, that is Kalamandir. Kush, would you recommend that?
I think Engineers India itself is doing rather well, and kudos to him on buying it at such a good price, holding on to this one for now. So I would suggest you should continue to hold on to this one. Yes, it is approaching the recent swing high of 250, 255, so maybe some resistance. But on the whole, if you ask me, the setup's pretty encouraging. But if you want to, yes, you can book partially. Sai Silk does not have a lot going for it right now. There is a bottoming out formation, which is in process. Maybe a close above 106, 107 perhaps will push that trigger. So maybe what you can do is not exit Engineers India completely, book partially, hold the rest, and enter Sai Silk once it closes above 106, 107, and then keep a stop loss at about 100.
Right. L&T Tech actually came out with its numbers, and if you look at what brokerages are saying on this counter, largely they have not changed their stance. ICICI Securities has maintained their hold rating, has marginally cut down the target price to 3,380 from 3,550, the earlier target price. Now they are saying that the company is looking quite robust post the cleanup that they have done. Apart from that, they also say that the portfolio rationalization has dimmed the performance in the fourth quarter. They have cut the EPS estimates for FY27 and FY28 by around 5 to 6% on the back of weaker than estimated growth in the high-tech vertical of the company. They also say that FY27 revenue growth will likely be in mid-single digit, given the fact that there is a strategic change, leadership change, and macro uncertainty also. Now, to give us more details on this, we are joined by Amit Chadda of L&T Tech. Firstly, sir, in the third quarter FY26, management explicitly stated they used that quarter to reevaluate market trends and consult with their clients to prepare the 5-year strategy starting FY27. So, what has Q4 thrown up for you?
So what Q4 has and the year has thrown up for us, I mean, if I was to give you a summary numbers here, so we ended up at total revenue for the company ended up at $1,321 million, so $1.32 billion of revenues. If I look at continuing business, if I may, which is the business that we will take going forward because we have divested a part of our business, we ended up at $1.233 million of continuing operations, up 8.3% year on year. EBIT margins came in at 14.5%, and net income came in at 1281 crores, up 7.4%. Just in the quarter, for continuing business, we came in at a net income of about 347 crores, which is up year on year as well as quarter on quarter, 24% up year on year, 9% up quarter on quarter. Overall, mobility has stabilized for us and will grow in CY26. Sustainability is up 13% year on year, and tech has done well. They've grown about 19.7% year on year. North America as a market grew 12% year on year for us, and Europe grew 2.5% year on year, and both of these will continue to grow. Sixth quarter in a row where we've brought in about $200 million of large deal wins. In fact, one deal win is about $75 million over 5 years. And overall, thematically, H2 has been better than H1 as we stand today.
Also, can you provide any update on the large deal pipeline size, TCV trajectory, conversion rates, and expected ramp-ups that we are looking in FY27 top line?
Sure. So, see, Luca, if I look out, my pipeline today is up 31% year on year, right? And number one. Number two is that our large deal wins also, as we look forward, I am fairly comfortable with this 200 million per year trajectory. See, the entire large deal wins through the year stood at about $855 million, which is up 40% from last year. So we are entering FY27 on a good note. Margins are up and they should continue to inch upward. Whatever we had to stop doing, we have completed all that in quarter 4, and you will continue to see the continuing business grow quarter on quarter from here on as you go forward. Lastly, we've actually added a 50 million account in our category as well. So after a very long time, a 50 million plus account, and we're sitting on a number of large deals in the 3-digit category, TCV 2-digit category, and we believe that will help us. Additionally, we have done 2 more things as we look forward. One, from a headcount standpoint, after a long time, we've added about 500 net headcount in the company. I do believe that as I go forward into the year, I will add another 500 headcount. The number of AI patents has gone up in the company, and we are pivoting on engineering intelligence, like I've told you. And finally, we made a little bit of a change. We've actually re-designated one of our board members to become the head of strategic initiatives, large deals, and growth markets, because we want to focus on that. And we've also inducted our CFO on the board of the company. So those have been, in a nutshell, what we have just done.
Now that FY27 marks the formal start of a Lakshya 5-year strategy, can you give us some specific revenue growth band for FY27 in constant currency terms?
Sure. So if I look at FY27, you will see the company strive for between 13 to 15% CAGR. So if I look back at the past, if I may, here, See, we grew at about 12.4% CAGR over the last 5 years, which was higher than the industry, which grew at about 8%. As I look at the next 5 years, I aspire to deliver between 13 to 15% CAGR over the next 5 years in an EBIT range of 16 to 17%.
But sir, analysts are watching for FY27 guidance as that is the ultimate needle mover. What are you penciling in there?
So FY27 will be higher in terms of growth than the organic growth we had in FY26 for sure. But story to be played out. As you are aware, we have stopped giving annual guidance. That's why we are providing a 5-year view and very fairly comfortable in this 13 to 15% band in a 5-year period. And largely driven by organic growth.
Thank you, Mr. Chadha. Thank you for joining us and giving us the way forward for L&T Tech. Well, that was the management. The stock is down around 2.5% in trade. Moving on to our next query coming in for Kush. Puneet from Ghaziabad wants to know whether Lupin or Fortis Healthcare, in which of this counter should he invest around 5 lakh rupees for the next couple of months? Kush, what would be your view here?
Mahima will be very happy about this. The jinx continues. Whenever Puneet is not around, we get a query from someone, his namesake. So that's obviously on a lighter note, guys. I think both of these stocks have a good structure. Lupin, by the way, is on the cusp of a breakout from a long-term perspective. So definitely something to be kept on the radar. The breakout comes at about 23.75, very close to the current level. So yes, I will keep this on my radar. If you want to be preemptive, you can buy with a stop loss at about 22.75. So about 100 points lower. And Fortis Healthcare also has had a good run, a trending line breakout, 200-day moving average being taken out for the last couple of days. So good move on this one as well. So I would say good stock selection on both of them. Fortis also you can go ahead and buy, keep a stop loss at about 900, 895 zone.
Okay, all right. We've got our next caller. I think Anjali is calling us from Vijayawada. Anjali, go ahead, ask your question.
Yeah, good morning, ma'am. Thanks for allowing me to ask the query. And I'm having Vimta Labs of 1,000 shares at 700 price, 1,000 quantity at 700 price. So I'm holding from last almost 8 months. So what is the long-term and short-term view on this? Shall I average now any good uptrend, or shall I hold?
Okay. Sorry, Anjali, I got your question. I take this up with Kush. Kush, Vimta Labs, any view on the charts for this one?
Yeah, nothing to write home about, I'm afraid, because it's had a big knock. The rebound also is not as encouraging and starting to see some resistances around the 495-500 zone. So maybe if 500 is taken out, and not just taken out, it has to be with some gusto, some strong volume backed action, then you could see it heading towards 535, perhaps even 560 kind of zones. But for now, consolidation, since there is a chance of a rebound, I would suggest a hold on this one, and the stop loss should be 450. There are a couple of technical support zones around that level.
The next query is coming in from Rajesh from Bangalore. He wants to know whether is it a good time to buy Gaudium IVF, the recently listed company, for long-term. Shaina, any view on this counter?
No, I don't track it.
Okay.
Next, Kush, by any chance, enough data on the charts to give a perspective?
Nah, afraid not, no.
Yeah, okay, all right, no worries. The next one is on GE Vernova TND. Jeet from Kolkata has bought at the levels of 4610. He's sitting on good profits of around 18% is what he's saying. He's not mentioned the quality though. Wants to know if it makes sense to enter the stock right now and average from a long-term perspective. Shaina, your view?
Well, both the business prospects are good, as well as, the stock has seen a one-way rally upside from a long time. At the same time, I believe, so because of the sharp rally that we've seen in the medium term, I would say buy it at dips, because valuations are slightly on the upper side, but business prospects remain strong. So you could keep adding it at dips.
Okay, the next is a caller query coming in from Hyderabad. Ram, you can go ahead and ask your query.
Hi, good morning. So I do have a query on the public sector bank. So I have invested in HDFC for 10% portfolio. So I wanted to invest into the Canara Bank, into the public sector bank. Is a good investment in the long term? First thing is, did I miss the rally? Is there any rally behind it actually?
Okay. Shaina, any view on Canara Bank? Good investment for a long term?
Yeah, I would believe so. It's a good investment. You can add Canara Bank. Valuations are pretty attractive. It's just at one-time price to book. And also, I think the balance sheet quality is improving. So you can add.
Okay. All right. The next one is coming in from Gayatri, who is writing us from Palakkad. She's saying she's bought Delta Corp at 72 rupees today, saying that is it a good bet from an intraday perspective, considering it's already dropped to 70 rupees. Coach, what's your recommendation on this one?
Yeah, no, from an intraday perspective, no, as you rightly identified, the stock's already cooled off from the highs. And if you see the charts, bang on at the 200-day moving average, it's hit that high and retraced from there. While the volume action yesterday and today is very encouraging, until it takes out the 200-day moving average near that 73 mark, I suppose, there will be some hurdles along the way. So from an intraday perspective, not too far from your buying price, I would suggest an exit right now.
The next query is coming in from Suman from Kolkata, and it's on ITC Hotels. He has around 670 shares, bought at a price of 199 rupees. Any long-term view on this, Shaina?
Yeah, I'm positive for the longer term. In fact, I think these are the levels you can average and hold it for a 3-year period. They are expanding and they should do pretty well over a 3-year period. Maybe in the shorter term, they are impacted by a number of issues like raw material prices of fuel. But I think over the longer term, it should pay off, given the rupee depreciation also.
Okay. The next one is on Canfin Homes. Sachin from Uttarakhand wants to know a short-term outlook on this one. He's bought 100 shares at the levels of 916. Kush, your recommendation on this one?
Yeah, you can continue to hold this one. Yes, just some distance away from the buying price, and incidentally, that happens to be the first leg of resistance once the stock, moves higher from here on. But I think the structure is fairly positive on this one. A close above 900 will push it towards your buying price and higher to about 955, 960 odd levels also. Volume action also very healthy. So yes, all in all, you can continue to hold Canfin Homes. Stop loss for this one comes in at about 860, 865.
Gunit from Mumbai wants to know whether is it a good time to enter Bajaj Finance for long term. Shaina, any view?
I think it's a bit expensive as of now compared to the other stocks on the portfolio. It is a strong management, but I would look to add it maybe a couple of quarters down the line when valuations start looking a bit more attractive.
Okay, all right. We've got Arvind on the phone line calling us from Bareilly. Arvind, a very good morning to you. What's your query about?
गुड मॉर्निंग मैम मेरे पास BST इंडस्ट्रीज का शेयर है 281 पे।
ठीक है।
कंपनी के रिजल्ट्स वगैरह काफी अच्छे आए थे अभी, पर मैं टेक्निकल चार्ट्स पे देख रहा हूँ, क्या मुझे ये 230 के लेवल तक दिख सकता है आने वाले समय में? 230 का लेवल।
230 अभी द स्टॉक अभी 261 पे है।
हाँ।
ओके,
टेक्निकल लेवल पे जानना चाह रहा हूँ मैं कि मतलब ये मुझे और नीचे मिल सकता है आने वाले समय?
अच्छा, और नीचे मिल सकता है कि नहीं? ठीक है, ओके, गॉट योर क्वेश्चन अरविंद. कुश, what is the perspective with regards to charts? Do you think it can go back to 230 and then bounce back from there? That's the strategy I think Arvind is trying to approach. Would you recommend that first thing? And do you think it will go back to that 230 levels?
So, देखिए अरविंद, if I may answer this in Hindi because he's asked it in Hindi. So, देखिए मैं कहूँगा एक गुंजाइश है, बट 230 नहीं, मेरे हिसाब से यहाँ पे आपको 245 का जो स्तर है इस पे नजर रखनी चाहिए. एक गैप है जो फिल होने आ सकता है. प्लस अगर आप देखें तो 200 डे मूविंग एवरेज 255 पे है. तो अगर आप और अक्यूमुलेट करने के लिए देख रहे हैं तो आई थिंक 245 से 255 का जो स्तर है ये जरा ज्यादा इंपॉर्टेंट है मेरे लिए. इनफैक्ट अगर ये ब्रेक होता है और 230 तक स्टॉक आता है तो स्ट्रक्चर थोड़ा सा बिगड़ जाएगा. तो अगर आपको अक्यूमुलेट करना हो तो 245 से 255 का जो जोन है इसमें अक्यूमुलेट करने देखें, ये जरा हेल्दी रहेगा.
Okay. The next is a caller query again coming in from Chennai. Yamini, you can go ahead and ask a query.
Yeah, hi, good morning. I have 110 shares of Godrej Aggregate at 783 rupees.
Okay.
I don't mind holding for a long term, or I don't mind from a long term perspective as well, but want to know if I have to exit anytime soon because I'm already booking a lot.
Okay, so I'll get you a technical query on this one. Kush, do you see further downside when it comes to Godrej Aggregate?
Yeah, the stock's just gone sideways. It's not really doing much, and for some time now. So there is a possibility that the stock could consolidate. I mean, even if an up move does come about, I think it might face hurdles around the 645 mark. So you're in for a long-term or a medium-term consolidation phase for the stock. So while you can continue to hold, I don't see an immediate uptick on this one. On the downside, I would suggest a stop loss like I always do around the 565, 560 zone.
Okay, all right. The next one is on ITC. Kishore Kushal from Vellore is asking this question. He's holding ITC 1500 quantity at the levels of 340. Wants to know whether he can average at this price from a long-term perspective. Shahina, your view?
Yeah, I believe he can average at this point because it seems to have found a very strong, around 300. That's a very strong bottom for it. So I would average, and valuations are attractive. We've seen VST industry numbers were very strong in the cigarette business. So I think the rest of the pack also should benefit from that. So I would say you can average.
The next query is coming in from Govinda. He's from Jharkhand. He wants to know whether should he hold or average more shares of Tech Mahindra. He hasn't mentioned any price at this level. Shaina, any view on Tech Mahindra?
Well, Tech Mahindra has shown better numbers than the rest of the smaller mid-cap IT stocks. Valuations also reasonable. So yes, you can, but given the fact that the overall IT sector is facing headwinds and the sentiment is negative, so I wouldn't buy it altogether. Buy it in a staggered fashion over the next four to 6 quarters.
Okay, all right. The next one that we have is coming in on Crompton Greaves Consumer Electricals. This is from Ashok, who's writing us from Ludhiana. Says he's a regular listener of NDTV Profit, so thank you so much for that. He's holding 1800 shares at the levels of 312. Can he continue to hold? Kush, your view on the charts?
Yeah, there's a double top formation around the 265 to 70 zone, so that could act as a technical resistance. The stock's already taken a massive knock, so some revival was on the cards. Given the current recovery, I would say yes, you can continue to hold stop loss at 235 zones, but for any kind of meaningful uptick to come about in this stock towards this buying price, I think the 260, perhaps even 270, that zone needs to be taken out.
The next query is coming in from Vinay, and he has around 1000 shares of L&T bought at a price of 3,204. He wants to partly replace this counter, or he can continue to hold L&T for the next 2 to 3 years. China, should he do this?
He can continue to hold L&T for 3 years that he's talking about. But if that is the only stock in his portfolio, yeah, he can add some other mid-cap stocks, maybe in banking or defense.
Okay, all right. The next one that we have is on Vedanta. Our viewer is asking whether it's the right, Anil Singh in fact is asking us whether it's the right time to buy Vedanta from a short-term perspective. Kush, the demerger date, of course, is set, has been announced on 30th of April. But do you think buying before that makes sense technically from a really short-term perspective?
I think it does. The reason for that is that stock had a good run, healthy volumes. There were negative RSI divergences popping up on the weekly setup, suggesting that yes, a profit booking dip was around the corner, and that's come about. If you see the last 4 sessions, the stock's already seen some profit booking. Again, not on very high volume, so that's a good sign. Supports were anyway placed at the 730-35 zone. If you see the low today, the stock's actually made a low at 733, so it's respecting that support zone. So yes, you could start accumulating Vedanta from a short-term perspective. Stop loss for this one would be at 720.
Saurav from Jaipur wants to invest 40,000 rupees in a stock. He's already holding Laurus Labs and Bharat Electronics. He wants to know whether should he add more shares in both these counters or should he buy Acuitas Chemical. Shaina, any view?
See, Bharat Electronics is one of the safest stocks in these volatile markets. He can buy it at any dip that he gets and hold it for the 3-year perspective.
Okay, all right. Time for our second rapid fire round. Keep your answers as short as possible, Shaina and Kush. The first one is on Eternal. Our viewers bought at the levels of 240. 1700 shares is what Parth is holding. Can he continue to hold from a short-term perspective? Kush, your view on the charts?
Yes, you should continue to hold. Stop loss at 248.
Charan from Bangalore has around 100 shares of Marksans Pharma at a price of 346. What's the long-term view on this, Shaina?
He can continue to hold as of now.
Godfrey Phillips bought at the levels of 2215. Continue to hold from a long-term perspective, Shahina?
Yeah, it's a hold.
Lata wants to know if there is any target for IIFL Finance. She's holding shares at a price of 505. The stock is down nearly 7% in trade. Kush?
I would in fact suggest a stop loss rather than a target. 415 is your stop loss.
Karnataka Bank, 800 shares bought at the levels of 172 rupees. Continue to hold. Kush, on the charts?
Yes, you should continue to hold. Stop loss for this one, 235.
Amit from Kolhapur is holding few shares of Wipro at an average price of 297. Should he continue to hold this counter or exit China?
Well, if he's looking at the longer term, he can continue to hold. But if it's short term, then he should exit.
Okay, Indian hotels from a long-term perspective of 2 years, Akash wants to know whether they can continue to hold the 80 shares that he's bought at the levels of 700 rupees. China?
Yeah, he can hold an average at any dip.
Mohan from Visakhapatnam wants to know whether should he hold Coforge from short-term view, Kush?
From a short-term perspective, no, I would suggest an exit on Coforge.
Okay, the next one is on United Spirits. 40 shares bought at the levels of 1371. From a 5-month perspective, Kushal wants to know whether he can continue to hold or not. Kush?
Yes, you can continue to hold. Stop loss on this one, close to the 1335 mark.
Vivek from Chennai wants to know whether is it advisable to invest in MV Photovoltaic at current level, China?
Yeah, he can. There's a lot of developments happening in the segment. He can continue to hold and maybe add also at any dip.
Man Industries, Rishi from Bhuj wants to know whether to hold or add at the current levels. Kush, your view?
No, it's a hold. In fact, you should book partially and maybe add some more around 515, 520 zone.
Ramesh from Pondicherry is holding 1300 shares of HFCL, bought at a price of 92.43. Any targets on this, Kush?
I'm sorry, I'm having difficulty. Oh, okay, got it. No, you should continue to hold this one. Good moves, I think 101 and about 108 are your targets. Stop loss could be at your buying price.
ICICI AMC, continue to hold or book profits? The viewer has not given the buying price, but Kush, your view?
Limited data, I'll pass.
Prashant from Bangalore wants to know targets on Tejas Network. He's holding 50 shares at a price of 445. Kush?
Yes, you can hold some profit booking happening. Hold for a stop loss of 385 and on the way up 450 and about 485 levels targets.
Okay, Abbott India, 2 shares bought at the levels of 19,000 rupees. The viewer wants to know whether they can continue to hold from a long-term perspective. The stock is currently trading at 25,400 levels. China?
He can hold.
The next
hold it at current level.
The next query is on Quality Power from Lakshmi. She's holding few shares at an average price of 835. Kush, should she continue to hold this counter or book profits?
Book partial profits, add again around the 1200, 1230 zone.
HDFC Bank bought at the levels of 800 rupees. Continue to hold. Kush, from a chart's perspective?
Yes, but don't expect momentum. This is more of a positional bet. I've maintained that previously also. Keep a stop loss at 765.
Vishwanath is holding 3,000 shares of Varun Beverages at an average price of 435. Should he continue to hold this, China?
I believe he should exit half of the quantity and hold the rest for long term.
Hyundai Motor, is this the right time to enter? Kush?
No, not very constructive on the setup.
Alright, that brings us to the end of this rapid fire round. China as well as Kush, thank you so much for taking out the time and helping us answer all those 64 queries I think that we managed to answer with, in fact, 3 management conversations. So thank you so much for that. But completely out of time on this edition of Ask Profit. Do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3.
Hello and welcome to KYC, that is Know Your Company. I'm Mahima Vachrajani, and let's try to figure as to what company are we going to decode today for you, our viewers, as well as people who invest in a lot of stocks. But, let's try to guess the company that we're going to talk about, right? The first one, let's try to pull up the slide and see. Leadership in Mangalsutra segment. This company basically holds the leadership in terms of B2B segment in the Mangalsutra segment, listed on September 17th, 2025. So fairly recent listing that we are talking about. The stock is up 29% from its IPO price, and that's not been the case for a lot of IPOs that have been recently listed in the past 6 odd months. Furrowing now into the gold bridal jewelry, which is a high margin business and also a high value business, which is going to give them leverage going forward, considering the manufacturing capacity also that have. So that's the guess the company part. Let's try to understand as to which is the company that we're exactly talking about. We are talking about Shingar House of Mangalsutra. With regards to this company, the company, what it does and, what is exactly the manufacturing capacity and what is the exact flow of manufacturing for this one. Basically, it specializes in design, production, distribution of Mangal Sutra, both in terms of B2B and it also gives it to retailers. So 15 distinct collections and more than 10,000 active SKUs is what the company has in terms of only Mangal Sutras right now. In terms of prominent customers, big names are there. Titan, Reliance Retail, Novet Jewelry, Joya Lucas, Malabar Gold, all of these are the clients for Shingar House. Now the company also serves 34 corporate clients, 1,089 wholesalers and 81 retailers. So it's a complete B2B business that it does in Mangal Sutras. The company is focusing now on high value added jewelry segment going forward, and in terms of where the capacity goes, it has around 2,500 kg per annum capacity and also has an integrated manufacturing facility that it does. So completely in-house manufacturing is what it has, and that to an integrated one. In terms of the key news coming in, I think an astute investor, S. Iyer, has acquired 5 lakh shares on 22nd of April. So this was a big news coming in. That's why we saw this movement in the stock price as well. The company is now diversifying into gold bridal jewelry, like I mentioned earlier as well, right? It's a high value business and high margin business as well. And in terms of where the other news aspect is concerned, the company is also shifting its manufacturing capacity from Lower Parel to Kandivali. So that's also another news to keep in focus and keep in mind. Now, in terms of how the industry is faring, right? Overall, India's wholesale gold jewelry, as per data from various sources, the segment is expected to reach around 48,900 crore by calendar year 29, and this suggests a CAGR growth of anywhere between 9 to 10 odd %. And this is the CAGR growth that we are talking about from calendar year 24 to 29. So that's the CAGR growth at which the entire industry is growing, but the company is growing at a much faster pace. Now, strong HNI interest is also there in the counter, and in terms of volumes as well, we've seen good growth coming in as to where the share price action is concerned. Strong distribution network is helping it in cross-selling also going forward when it diversifies into high value and high margin business of bridal jewelry. And the other reason as to why it is in a sweet spot is because larger order wins are expected from corporate clients going forward once it diversifies, plus its existing business as well. And the company is targeting unorganized sector and undeserved tier 2 to tier 4 markets. So I think the focus more right now is from tier 2 to tier 4 markets, and that will give company an overall leverage going forward in terms of its distribution, in terms of its selling opportunities as well. Now let's try to take a look at what are the parameters that we're going to talk about in this segment. The first one that we're going to pick up is the income statement, followed by balance sheet, then cash flow, and then return ratios. And then we're also going to talk about how the shareholding pattern is for the company, followed by street cred as to how the account has performed so far since listing, valuation metrics, as well as what's the outlook going forward. And then we'll also be speaking to the management of the company to understand as to what the outlook of the company looks like. But let's start talking about the first parameter, the income statement. In fact, like I said, we'll be speaking to Viraj Thadeshwar, who's the AD and CEO of Shingar House of Mangal Sutra going forward. But let's start talking about the parameters, the income statement first. Now, if we take a look at the last 3-year CAGR growth in terms of where revenues stand, it's been a strong growth of 21%. EBITDA growing at almost 45% of 3-year CAGR, and net profit has seen a growth of 46% CAGR. Now, a lot of this growth in the past 2 years has also come in with rising gold prices. Because of gold prices going up, we've seen a lot of value growth coming in, but we'll try to understand from the management as to how volume growth has also fared. Now, because we've seen strong CAGR growth in the past 3 years, we've given it a thumbs up. In the past 9 months also, the company has done fairly well. Revenue growth of 41% year-on-year basis. For EBITDA growth, it's even stronger as compared to how its 3-year CAGR has been like, a 65% growth, and net profit growth at 76%, much better as compared to what it's done in the past 3 years. In terms of margins, I think this is where the pain point is, because margins have been reducing for them, but them foraying into other segments might improve their margins going forward. So that's with regards to where income statement goes. But let's try to take a look at the balance sheet aspect as well, as to how balance sheet has been in the past 5 odd years. In terms of where the balance sheet goes, overall, from a perspective of share capital perspective, we've seen that it got listed recently in September 25, and in terms of reserves, they've been growing in the past 3 years from a 128 crore to almost an increase of 500 odd crores. So they've been reserving whatever profits they're making from. Even in terms of total equity, that aspect has also gone up because of reserves going up. Borrowings have also slightly increased. So we try and understand from the management as to why these borrowings have gone up, and this is largely on account of both short-term and long-term. Short-term largely on account of working capital, but we'll try to understand as to what the debt repayment plans are looking like. Cash and bank balance is an area of concern. We'll try to ask the management if there is any fundraising on the cards considering the expansion that they're planning, because overall cash balance has remained in that range of just 3 to 4 odd crores. So that's with regards to where balance sheet goes. Now let's try to pull up the cash flow statement as well. This is the third metric that we're going to talk about. In terms of cash flow statement, cash flow from operations has turned negative in FY25 and has also stayed negative in September 25. And considering 9 months at a negative 7%, the year will also close at that negative number as well. But overall, PAT has seen a good increase, but cash flow to PAT ratio has been on a negative footing. So I think that is an area of concern. We'll also speak to management about it. But overall, even net cash flows has been on a negative footing, and that's why we've given it a thumbs down. Now let's try to pull up the return ratios aspect and see as to how they have been. A healthy return ratio and has been largely maintained in that range of 20 to 24%. So your ROCE has been stable and has been at that 24% mark in the last 3 to 4 odd years. So I think there's no area of concern here, and we've simply given it a thumbs up when it comes to the return ratios. Now let's try to see the street cred of this company as to how the company has done when it comes to the share performance since its listing, and as to how the entire performance has been like. But before we talk about that, let's try to take a look at the shareholding pattern as well. There is skin in the game when it comes to the promoters, because promoters have been constantly holding 75% into this counter, and it doesn't look like they're going to reduce their entire holding. But FI holding, there is FI interest coming in from a 4% just during listing. It's gone up to 6% in just a matter of 2 quarters. DIs, of course, have been selling and FIs have been buying. That's from a 4% in September 25. DI holding has come down to around 2 odd percent. Public holding remains fairly stable around that 17 to 20% mark. As of March 26, it stood at 17 odd percent. So that's with regards to how shareholding goes, but there's skin in the game, and that is why we've given a thumbs up. Let's try to pull up the street cred, like I was talking about, from the LIFI, of course, it's down 19%, and this is considering the way markets have moved in the last couple of months. But overall, from its IPO price, it's up 29%, and from 2026 low, it's up 26%. So there is gain coming in from 2026 low as well, and that means that it's showing high investor interest in this counter. Just to point out here that IPOs in the recent past 6-8 months have not done very well. As compared to that, at least this IPO has seen gains of 29% versus its issue price. So that's with regards to where street cred goes. Let's try to pull up the valuation. This is not an interesting aspect, because overall, if you take a look at the valuations of all these jewelers, because Titan is trading at 80 times P right now, Thangamayil at 49 times, Kalyan Jewellers at 36 times, and this as compared to Shingar just trading at 21 times. So valuations as compared to where peers are concerned is much more attractive for something like a Shingar House, Mangalsutra, and considering that it's growing at a very fast pace, at a very good CAGR, the valuations right now are justified at where they stand. Let's try to then look at as to how the outlook of the company looks like in the next coming years and near future as well. They are diversifying into gold bridal jewelry, and that's certainly a thumbs up, because like I said, it's a high value, high margin business, which is certainly going to benefit the margins for the company. Plus, it's targeting the unorganized sector, that is tier 2 to tier 4, where there's a lot of unorganized sector that's playing its part in different ways. I think organizing it is going to definitely benefit the company. Third-party facilitators are onboarded to drive scale from here on, and that is something that is going to augur growth for the company going forward as well. Lastly, in terms of where the outlook stands in terms of expanding. The company is planning to expand to 5 cities and has identified more for further rollout as well. So the company is not just planning to diversify into segments, also planning to expand in terms of where geographies are concerned. Plus, it's also building going forward a strong presence when it comes to their overall presence. But this, of course, is with regards to where the outlook goes. Let's try to now see as to how the cumulative ratings look like of all the 8 parameters that we talked about. The first one being income statement, we've given a thumbs up. Good CAGR growth, all in terms of revenue, EBITDA as well as net profit. Margins, of course, still a concern. But overall balance sheet is a thumbs down because cash position is at a very thin lining. Plus, there is borrowings which is growing. So we talked to management about that. Cash flow, we've seen negative cash flow in FY25, operating cash flow in negative in FY25, as of September ending as well, and that's why we've given it a thumbs down. Return ratio is very positive, very healthy, near that 22 to 24% mark, so giving it a thumbs up. Shareholding, also a thumbs up because there's skin in the game, 75% held by promoters, plus FIs seeing an increase in stake. Street cred is slightly a thumbs down because overall, if you take a look at the picture as to how it's off from the high point, we've seen some pressure coming in the stock. Valuations, definitely a thumbs up, much better as compared to where the peers go, and that's why we've given a thumbs up. And outlook, most certainly a positive one because the company is planning to expand into segments as well as geographies coming in. So the total rating that we've given this counter is 5 out of 8. So that's the overall rating. Of course, with regards to how the Shingar house of Mangalsutra goes, but let's try to get in the management, as well. We're now joined by the management. Sir, my first question to you with regards to, what we talked about. We've been talking about how, significant growth you've seen in the past 3 odd years. Just want to first understand as to now that you're trying to foray into this bridal jewelry that we talked about. It's high value business plus high margin business as well, if I'm not wrong. What is the foray looking like? What are the plans to grow this segment as a whole?
Hi, good morning, first of all. So the point about the bridal jewelry. So as you know, we have been in the Mangalsutra segment for over decades. And for us to grow, being a Mangalsutra, it is the most key product in a bridal jewelry. So for us to grow in this segment, bridal jewelry, was a must-do point. Because the customers we have, like currently we're having more than 1,000 customers who are consistently working with us, and we are growing with them. And these customers are not only just unorganized players, but giants and organized players as well. So in the whole entire process of growing, even these customers are growing big, and we want to grow with them. So Mangalsutra is a key product for us, but to grow multiple times, we have to increase our product categories. So bridal category was a big demand from our customers to us, as they are seeing good rise in bridal jewelry category. So we have already started developing and selling bridal jewelry in the market. And we are in the tie-ups with all the big jewelers, the corporates, the single chain stores and single stores. Bridal jewelry, if we talk, it's more than 40 to 45% of the total jewelry market. So that is a big jump we are looking at. And with the existing customers, we are hoping and we are positive that it will give us a very good boost in terms of growth and in terms of profit returns as well.
Okay, Viraj, with regards to where your overall margins are concerned, they've been slowly and steadily growing, but wanted to get a sense, considering that the gold prices have shot up a lot, with overall condition in the West Asia conflict as well. Where do you see your margins going at? Plus, you're entering, the bridal jewelry space. What are the margins going to look like going forward? Is there going to be a steady pace of growth going forward as well, or they're going to be in that range of 6 to 7%?
When we talk about bridal jewelry, of course, it is a high profit-fetching category.
Correct.
So the other reason also to get into bridal jewelry is that the industry is growing, the category is growing. And with the new manufacturing setup we have just recently started, we are looking at producing much more high value products, which can fetch us more profit. And with the new setup, we have not only increased the production capacity, but we have also increased the quality of the product, the range of the product, and the high range of the product, so which can fetch us better margins and also give our customers a better quality and a top-notch product.
Viraj, with regards to where your capacity utilizations go, they've dropped a tad bit in FY25 as compared to where they were in FY24, if I'm not wrong. What are the capacities utilizations looking like right now? And going forward in FY27, what is the expectations in terms of how they will fare?
When we talk about the capacity utilization, I think it was nearly, production capacity utilization was nearly around 70% in the previous years. And with the new setup coming in, and we have almost 2x doubled our capacity with not only just, and also at the same time, we have increased another category with a new manufacturing setup. So we are looking at bigger volumes, bigger sales, and majority utilization of the capacity. And with the existing customers, the name of the customers you see, and the growth they are showing, increase in future as well.
Got it. Viraj, with regards to your borrowings, the long-term borrowings have reduced to quite an extent, right? They're almost negligible right now. But in terms of short-term borrowings, I reckon that this is on account to quite an extent, right? They're almost negligible right now. But in terms of short-term borrowings, I reckon that this is on account of your working capital requirements. But this is compared to where your net cash flow position fund your working capital requirements, or maybe fund your expansion, you'll be needing funds. So maybe fund your working capital requirements, or maybe fund your expansion, you'll be needing funds. So
we are not going to rush into borrowings a lot right for now. But we are not going to rush into borrowings a lot right for now. But as you know, the capital, the working capital we require with the increasing in gold rate. So currently looking at the existing working capital, I feel that we are more than ready. So currently looking at the existing working capital, I feel that we are more than ready. Not too sure about increasing of borrowings, but yes, to increase revenue. Not too sure about increasing of borrowings, but yes, to increase revenue.
And what is the store expansion plans looking like going forward in terms of the growth plans going forward? And what is the store expansion plans looking like going forward in terms of the growth plans going forward?
Added 2 new stores, one in Delhi, one in Pune, and Bombay, which is a key main corporate store which we have. So currently we are in the process of more increasing the revenue and scaling up in the existing stores only. And probably once we achieve that, hopefully this year or probably next financial year, we are, and probably once we achieve that, hopefully this year or probably next financial year, we are through stores, but also through facilitators module, which means that we, by not opening stores, but to also make our reach that particular city or that particular state using the potential in another city. So hopefully we may plan and also go ahead for other cities.
Price of gold have really gone up, right? So what's the kind of volume growth that you've seen in FY26, and going forward, what is the kind of growth that you're penciling in for FY27?
So definitely the focus, the gold rate increasing, but the main focus for us is volume growth also. So the gold rate increasing, but the main focus for us is volume growth also. So we are dedicatedly, our entire team, let it be the sales team, which is we have been increasing the sales team, the entire management team, the manufacturing team. So to make it more organized and more productive, we are working towards how to increase the volume. Key point for us in volume growth, and we are expecting a good volume on
gold prices. What is the hedging strategy in place right now? How much of hedging do you do? And how do you cover yourself against that volatility?
Yes, so we have always been following a hedging policy, and we are going to maintain it at the same pace because in such a volatile market, so the hedging policy is maintained. Currently, we are having a 40% hedging policy.
Is gold still stuck there? And any impact on your business because of that?
So being in jewelry since a very long time, since several decades, the channel we follow in jewelry since a very long time, since several decades, the channel we follow gold bullion. So we never saw any big challenge coming in terms of procuring. We follow because of the multiple channels we follow for our supply and we depend on them. So it has never been a challenge. We follow because of the multiple channels we follow for our supply and we depend on them. So it has never been a challenge for us.
And with regards to the West Asia conflict, any exposure that you have in Middle East, has that been impacted at all?
So of course, in the last 1 month, we have seen Middle East being disturbed. So of course, there has been certain disturbance, but at the same time, we have seen a seasonal growth in the same period, which we see right now. There has been an Akshaya Tritiya season recently. So that my focus has always been, Shingar's focus has always been the domestic market. But of course, we are focusing on, my focus has always been, Shingar's focus has always been the domestic market. But of course, we are focusing on overseas market as well. So not only UAE, currently we are supplying to US, we are supplying to UK, we are supplying to New Zealand and several other countries. So the exposure is so vast that the volume compensation comes from all over the country and from outside.
Sales, and how will that dynamics change going forward?
Like I mentioned, 98% comes from the domestic market. But now with the new category coming in, it will be a very key point and a strong point for us to step into overseas market, as we will now be able to go to our customers with a vast range, not just only Mangalsutra, but other. So the new category will not only increase in India, but also from overseas. So the new category will not only increase in India, but also from overseas.
That's at NDTV Profit. All right, so viewers, you heard the management. That was Viraj Thareshwari.
बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech.
This Tech.
A show where the mysteries of megabytes and motherboards shall.
This Tech.
A show where the mysteries of megabytes and motherboards shall.
Ecosystems, EVs and AI that you can use in your daily life.
And what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance.
Tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that a show that puts the most traded stocks under the scanner. We dissect the company so that to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India market opening now in its boldest lines.
Speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. And Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Your favorite market show just got better. On NDTV Profit, for your profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to Watching Prime Time with me, Raisha Sehgal. What's happening? How?
The show that sets the prime time agenda.
We'll be deep diving
on NDTV 24/7.
A lackluster handover continues to keep the benchmarks under pressure today, with risk sentiment are under the most amount of pressure, while pharma as well as energy remain resilient. The war premium is back in the barrel by 2031 to list 2 more companies from Godrej stable. Stay tuned. 24 constituencies vote in the first phase. In Tamil Nadu, all 234 seats are voting in a single day election. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. At the moment, Nifty 50 really are losing 170 odd points. Remember, it opened with 200 points odd gap down. And today, also in the trading session, at the moment, it 200 points odd gap down. And today, also in the trading session, at the moment, it volatility in the first half of the trading. Well, if we take a look at the contribution chart, well, most of the heavyweights like Reliance Industries as well as HDFC Bank and most of the heavyweights like Reliance Industries as well as HDFC Bank and ICICI Bank and Mahindra, all these are really contributing downwards for Nifty 50. Little bit of strength, and those are coming in from the pharma space like DRL as well as Cipla. Is really, especially from the pharma pack, even Sun Pharma are showing a tinge of green at the moment. But on the downside, remember the consumption and also a yardstick for economic activity, auto sector along with bank sector. These are the ones which are really coming in as a drag. So market really worried about overall momentum coming in from the war front. Remember, there are 2 factors which are also impacting the sentiment, and they are all feeding into each other when it comes to is a bad news for the Indian market. And on top of that, remember, rupee has also been consistent as a concern. So that's where the market is at the current moment, almost. When we talk about Nifty 50, and IT is not that bad today, which was a key coming in. Kritika, what do you make of trend's result, and also what is the signal it gives on this coming in? Kritika, what do you make of trend's result, and also what is the signal it gives on the demand and consumption scenario while we are grappling with many of the headwinds coming? Kritika.
Yeah. Trend results were a strong beat and estimate.
Kritika.
Yeah. Trend results were a strong beat and estimate. .6 versus around 16 expected, and PAT also grew by around 30% and beat expected. .6 versus around 16 expected, and PAT also grew by around 30% and beat expected. There is some expectation of muted this due to geopolitical instability.
But movement of trend after this particular result, does it call for an upside or down movement of trend? After this particular result, does it call for an upside or downside? And how do you find the valuations in your assessment?
Basically, the current the downfall in the today's session is largely due to the profit booking. Post the business update, the stock had already seen a strong uptick in the. Also, there are some concerns for the like-for-like growth due to cannibalization and new stores taking time to mature. So these two are the main factors why the stock is seeing some
valuations where the stock had run up over 30% in 1 month ahead of the results, and now seeing valuations where the stock had run up over 30% in 1 month ahead of the results, and now seeing a slight bit of profit booking coming in of 2.5%. Do you think it's a buy for medium term at these levels?
Going ahead? So definitely at these levels, we can consider it to be a buy.
All right. When we talk for this particular quarter, and that was also expected, 18.6%. Do you think, you said that the margins will continue to improve because of cost efficiency measures. Do you think first these levels, 18.6 that it has already achieved, these are really are sustainable, and also how much upside do you see are really are sustainable, and also how much upside do you see in the margin front going forward?
So for the current quarter and for the financial.
But one more important thing is that the commentary coming in from the management across all companies is the price inflation because of the various raw material supply chain constraints expected to accentuate further if the war really continues. Looking at that, Kritika, how would you expect it to accentuate further if the war really continues? Looking at that, Kritika, how would you see trend in particular and the space overall?
So but in the medium term, if we see
so over a 1 to 5 year term, would you have a view on the expansion strategy and how the stockholders' returns can really accentuate in this counter?
So currently they have around 1,300 odd stores across its lifestyle concepts, and they are aggressively adding Zudio stores in tier 2 and tier 3 markets. So we see good expansion, no specific numbers, but we see good expansion in the Zudio portfolio going ahead as well.
Right, Kritika, thanks so much for a quick take on the trend results really coming in and slight pressure on that particular counter on an otherwise, remember, weakish day, and the stock had already run up by over 30 counter on an otherwise, remember, weakish day, and the stock had already run up by over 30 profit booking coming in, but from the research side and at least from all the brokerage reports that have come in set of numbers when it comes to the earnings and the demand as well as consumption momentum. All right, moving on to another important discussion that we are really tracking. The government had announced, that even in the fuel used for aircraft, because of the ATF prices going very high because of the crude levels being on the higher side on account of the Middle East tension. TV Profit, your first take on the government's measures on various alternate forms of energy. TV Profit, your first take on the government's measures on various alternate forms of energy while we are constrained on the crude oil front.
Thank you so much for having me. I think it's a great day for us. Yesterday, there was a notification to sort of. This is not a. I mean, it's of course it's late in time that the government brought this. Has
on this, and you're an expert on bioenergy. Understanding the practicality of this mix. Has it worked? How will it work? And what is the already precedence that we have that this can be used immediately? Because the concern is also immediate.
So if we take a step back, close to 65 to 70% of the emissions in the aviation sector comes from burning of fuel. So that's the world that are in use. And these 40,000 airplanes have to consume air turbine fuel is achieved, or rather is emitted per megajoule of energy that is burnt while the aircrafts are achieved. And we're trying to set up a 10 crore liters per annum sort of a capacity in Andhra Pradesh, is using ethanol as feedstock and converting these molecules into alcohol to jet based SAF. Capacity in terms of ethanol, we are well poised not only for self-consumption or the
entire life cycle. I want to understand while you are looking at carbon emission aspect of the entire life cycle. I want to understand while you are looking at carbon emission aspect of the green, SAF. I am also looking at the cost component because of which the government was pushed to take this kind of a decision. So in terms of aviation fuel, in that, what is the practicality and technicality in terms of usage immediately is what I wanted to understand. In terms of usage immediately is what I wanted to understand.
Almost 3.5 to 4x of that of air turbine fuel. So of course, naturally, because SAF that is being traded. However, what we have estimated at Trueworld Bionet, and to support the domestic airlines from the price shock, they gave a discount of 25 rupees. So today, and to support the domestic airlines from the price shock, they gave a discount of 25 rupees. So today, about 25 rupees cheaper than that of what the real market cost is. Whereas so just one point on this is, if we pay this premium today, eventually we end up at scale, we can curb down the price to a great extent and maybe even cheaper than the air turbine fuel that we end up getting.
I think the discussion then will shift to the availability. At least we have the assured availability in the
5 ethanol plants. We're one of the largest ethanol manufacturers, and we have committed to set up, only end up having this plant commission in the next 16 to 18 months. Right now, there's only one plant contribute to the SAF blending program of Government of India.
All right. Thank you so much. Said the groundbreaking can happen only 1.5 to 2 years from now. But the innovation and the process has already begun. That's good news. And the government has also given direction for self-sustainability on this part going forward. So you split off the group. There is a new year and scale it further, but also talks about the impact of the soaring crude prices and the impact of war on his different businesses. Here's a snippet of the conversation. Impact of war on his different businesses. Here's a snippet of the conversation. Currently, in this environment where a lot of crude intermediaries are really adding to the inflation, supply chain constraints are really adding, what are the various new factors?
Momentum in that business. If you look at it, I think the FMCG sector as a whole went through a very sluggish period for a couple. I think the government identified that, has stepped in with some sensible moves on GST and other things. And we actually have seen a big recovery in the market. We've also done, I think the team in our also in various parts of our portfolio, such as oil palm and other things. But I think the question will really be how, say, even in April, the momentum in the business has actually been extremely strong.
Right. And when it comes to also the impact on the ground for this particular business, has it also pushed your targets of double-digit growth in a tough environment?
No, I don't think so, because I think the business is doing very well. It has a lot of brands that are growing very fast. I think the kind of innovations the business something like Godrej Fab, our liquid detergents brand, has grown from 0 to 400 in just 2 years, making it one of the fastest home care brands, fastest growing home care brands in the country. Similarly, we've had small acquisitions last year that we home care brands, fastest growing home care brands in the country. Similarly, we've had small acquisitions last year that we think can do very well, like this Mushtaq acquisition. So I think there's a combination of things going on.
Market cap will have to be done by the consumer products business.
I think it certainly has to be a big contributor. It's at the starting point.
Market cap will have to be done by the consumer products business.
I think it certainly has to be a big contributor. It's at the starting point the largest market cap business for the group, but by no means will it have to do all the heavy lifting. I think we have big expectations. The largest market cap business for the group, but by no means will it have to do all the heavy lifting. I think we have big expectations from businesses like Godrej Properties, which has now been for 3 years the largest residential real estate developer. You know, the Godrej Properties has an accounting standard where you only recognize the things. You know, the Godrej Properties has an accounting standard where you only recognize the thing. P&L earnings. I think the market is waiting to see those earnings. We're quite hopeful and confident of delivering those in FY28.
All right, so that was Pirojsha Godrej.
28.
All right, so that was Pirojsha Godrej talking about the various group companies. Remember, there are 3 listed entities from Godrej Industries. Let's get talking about Tech Mahindra as well. That stock is also seeing some bit of pressure, over 1.5% down after a downtick yesterday as well on account of HCL Tech. So in this particular week, they are down almost over 4% in trade. And this after coming out with the stellar Q4 backed by robust margins as well as an uptake in the revenue of Tech Mahindra.
The way we see it, there is a very significant
of Tech Mahindra.
The way we see it, there is a very significant modernization opportunity. There's a very significant opportunity to deploy agentic AI to our clients. And also a lot of the R&D work we've been doing, right? For instance, building sovereign large language models, building a telco reasoning model. All of these we feel will result in significant revenue opportunities down the line.
All right, moving on to another set of numbers. We are talking about Havells here, a raw material disruption weighed. Anil Rai Gupta, Chairman and Managing Director of Havells India, spoke about the company's performance. The stock is down almost 7% in trade. Take a listen.
The largest segment amongst cables and wires, which is domestic wires business,
did see the largest segment amongst cables and wires, which is domestic wires business, did see a revenue flattening in the fourth quarter because of the fact that they were
coming in under stock impact. Goodbye for now. Thanks so much for tuning in.
हर पल मनाओ केसरी त्योहार विमल हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew. Every morning on India Market Open. Every morning on India Market Open.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and we'll have Alex Matthew, who will be joining us shortly at the NDTV Profit Market Pit with all the action. But first up, let's quickly take a look at what's happening with the markets. Let's pull up Nifty 50 on the screens along with Bank Nifty, and then we'll look at the sectoral indices because it's the pharma pack which is seeing full power. Profit booking to some extent has come in on Nifty 50. We're now seeing cuts of around 0.8%. We have cooled off, from the day's highest levels as well. Apart from this, let's just pull up Bank Nifty because that itself is seeing cuts of nearly 700 points as we speak. So there is pressure building in terms of financials where Bank Nifty is trading at the day's lows. Let's quickly look at the sectoral indices right now and see what's happening with individual sectors because pharma was the one that was firing, that continues to remain in the positive with gains of 2%. Energy and media, a few of the other ones. But what's actually putting pressure is the auto index. That's down 2%. Financial services, PSU banks, consumption, real estate, metals, all of them are seeing profit booking in today's session after the kind of run-up that we've seen in yesterday's day of trade. Let's quickly look at the broader markets as well. You have the mid-cap and the small-cap index, and then we'll see what the VIX is doing. There is that profit booking coming in terms of mid-cap 150, which is now down around 0.4%. And if you have to look at small-cap 250 as well, at the day's lowest levels right now,
with cuts of 0.3% coming in there. The VIX as well, you know, we're still elevated at levels of around 18.76. I think 15 is that level when usually the markets find some bit of comfort. So there is that cautiousness which is prevailing because there is no clarity emerging with what's happening with the West Asia crisis. And that's the reason why we're seeing this kind of market moods. Very quickly, let's look at NSE 500 and we'll see which are the stocks that are in focus today. Because clearly, I mean, it is a day where you've seen a lot of stock-specific action. So there you go, Delta Corp reacting to numbers. You have Godrej Industries again, that's the SAF boost that we are seeing. Oracle Financial again, numbers. The Pharma Pack is up in trade. Data Patterns is another one. ILFL Finance trading under pressure. Havells down as well, reacting to numbers and brokerages, where it's very interesting to see how all the brokerages are positive. It was a Citi which was the only one which has highlighted why a Havells could be a downer, and that's exactly how it has panned out. TVS Motors, Sterlite Tech and Sun TV are a few of the other names that we are watching out for. So that's with regards to where markets are concerned. But let's actually look at what the watch list is looking like as we speak right now. In terms of stocks that are in focus on this show, to start off with, first up on the screens, let's pull up, you'll have all the pharma stocks that are in focus. You have Camlin Fine, which is trading at a 1-month high. Websol as well. Yesterday, Vijay Kedia bought that 1% stake, and since then that stock is up in trade. GBTND is trading at an all-time high. Delta Corp, on the back of a strong set of numbers that they've reported, is buzzing in trade. Apart from this, let's look at the other set of names which are on our radar as we speak. Havells India, again reacting to numbers. You have IFL Finance and TVS Motors, where the volumes are pretty strong. Trent, again, the discretionary spending has eased. JFS, they've approved a JV with Allianz. Tech Mahindra is in focus as well on the back of earnings. Infosys, again on the back of earnings, along with Oracle Financial Services, Tata Communication and Bharat Coking Coal, all of them reacting to numbers. Praj and Trueworld, we already spoke about the ethanol blending aspect. Patel Engineering on the back of an order win. And SBI Life, where the VNB margins have dropped, and that's what the street probably is taking with a pinch of salt. So that's with regards to where the watch list goes. But first up, let's quickly look at what's happening with a Tech Mahindra. Let's pull up that one on the screens. The company reported numbers, you know, overall at the look of it looks strong. They have said that they will be maintaining their FY27 guidance as well in terms of execution. Let's listen into a slice of that conversation that Tamanna had with Mohit Joshi, CEO and MD of Tech Mahindra.
The way we see it, there is a very significant modernization opportunity. There's a very significant opportunity to deploy agentic AI to our clients. And also a lot of the R&D work we've been doing, right? For instance, building sovereign large language models, building a telco reasoning model. All of these we feel will result in significant revenue opportunities down the line. In the short term, though, there is a concern that some of the productivity asks that are being driven by the client will result in some revenue compression for the industry as a whole.
Okay, so that's with regards to where Tech Mahindra goes. But you know, the other stock which is in focus from the IT pack, you have Infosys that will be reporting numbers today. The other important development is going to be if anything comes in terms of a decision on Salil Parikh's extension goes, because there are news reports which have been suggesting that his third term extension is something that could not be on the cards. It might just be for 2 years till they find another person to replace him. But let's head across to Jasmeet to understand details in terms of what is expected. Jasmeet, after Tech Mahindra, now you have Infosys, which is in focus as well.
Yes, Hiral, I've been trying to say good afternoon. I'm getting
I was just expecting a Jasmeet to be there, and I just get Alex.
Well, so there's a very distinct difference in the way that Alex and the way that Jasmeet looks. Let me bring him into the frame as well, and you will see what we're talking about. Jasmeet, we're talking about Infosys, and the IT pack as a whole has been in focus all through the week because of earnings. You were at Tech Mahindra yesterday. I'm sure there'll be a few talking points from that. But Infi, a lot of fund managers watching for the commentary from this company very closely. What are the key aspects to pay attention to? Well, how we have seen for other IT pack, we expect a muted quarter even for Infosys. Now, the key focus remains on the guidance. We are penciling in a guidance between 2 to 4% for FY27, but again, that becomes a key watch out given that HCL Tech had given the guidance below the estimates. So that's why the guidance for Infosys becomes very crucial for the entire IT pack altogether. While last year we did note in the Q4, the company hiked the guidance for FY26, but for FY27, the guidance estimated is between 2 to 4%. Well, apart from that, we expect the CC growth to be negative 0.6% on the back of that weak quarter. Apart from that, the large deal wins is something to watch out for, given we are estimating 2 to 2.5 billion in this quarter as well. Then we also have to look at the commentary in terms of AI deflation, which HCL Tech gave between 2 to 3%, but none of the other players are given so far. So Infosys, is it coming on and giving the AI deflation guidance, something to watch out for? Apart from that, we see the overall ramp up when they are costing and further the acquisitions they have done in the previous quarter and how those are ramping up for the company. While lastly, the focus also remains on altogether the EBIT guidance as well. We did know that HCL Tech gave an uptick in that, but the Infosys remains at that band 2022. Will they maintain that or will they increase it? Something to watch out for.
Sure. And there's also at the helm whether Mr. Parikh gets the extension that has been sought or whether it's going to be a shorter extension. But Hiral, earnings front and center, even as we're speaking, Union Bank numbers are out. How do they stack up?
Yeah, I mean, at the face of it right now, if you just pull up the stock, you'll see the kind of reaction that's coming in on a Union Bank, Alex, because what I'm picking up so far is there has been an improvement in terms of asset quality. However, the provision number has spiked this time around. Your profits are up barely 6.6% this time around. So after that initial spike, you have seen that downtick that's coming in, and Union Bank of India is trading at the day's lowest levels. If you look at the other numbers which are flashing, your gross NPA is at 2.88% versus a 3.06 on a sequential basis. So that is telling you that your gross and net NPAs have improved. If you look at the provision numbers as well, that is an important aspect to consider, because the number that I am picking up right now is close to around 1,055 crores, which is nearly 3 times your previous quarter provisions. So that is going to be something that we need to watch out for in terms of the provisioning number as well. Apart from that, in terms of the other aspects, I'm just going to wait for the flashes, but categorically, it seems that the street is not really happy with the initial set of numbers that have been reported so far. If you have to look at the consolidated segmental revenues, your treasury income, because that is something that the banks have been monitoring. So on a sequential basis, we have seen a downtick that has come in on the treasury income front as well. So that probably is something what the street is not really happy with on the segmental front. In terms of your retail banking operations, that has remained almost flat if you have to look at on a sequential basis, but on a year-on-year basis it has improved. It's mainly the treasury operations which have seen a downtick on a sequential basis and on a year-on-year basis as well. Your operating profit has absolutely remained flat with a growth of around 3% at 7,955 odd crores. So that's with regards to Union Bank so far. Street seems to not really be happy with what we see so far. Let's get in Raja Venkatraman from Neo Traders as well. Raja, welcome to the show. Always a pleasure to speak to you. A quick view when it comes to Union Bank of India in terms of what charts are indicating.
They have been moving quite a bit slowly, and the PSU banks definitely are not able to live up to the expectations what the markets are deriving. And Union Bank has been witnessing some profit booking right now. Though the result seems decent, the profit booking which is seen at the higher levels clearly indicates that yes, there could be some pressure to the downside. So now if you're going to take a look at Union Bank, one should be looking to buy it at lower levels, because at higher levels there are strong resistances emerging closer to the region of around 195 to 200. I would say that if you want to get into a Union Bank, then the closer levels would be around 165 to 170.
Hi, Raja. There are a few stocks that we would like to talk to you about in the rapid fire round. Let's keep this quick. The first one is Websol Engineering, and this is on the back of a significant stake acquisition by Vijay Kedia. The stock is in focus. Would you trade this?
Yeah, Websol Engineering, definitely positive news flows, and overall the structure seems to be encouraging. So yes, I would trade it.
Okay. And what would you do with it?
I would look to play it for the next 2 to 3 months.
Okay. IFL Finance, significant volumes. What are the key levels to watch and what's the strategy?
Yeah, NBFC space is definitely a very interesting space. And first of all, IFL, I would avoid it for the moment. The reason being that the markets have started reviving, but this stock hasn't. So I would say that it's best to avoid this at the moment.
Okay, TVS in focus for multiple reasons. In the most recent developments, of course, there was a joint venture or joint development agreement with Hyundai. But would you buy into this counter?
Yeah, see, especially after the Euro deal which happened, the auto sector did go up. After that, for the last 6 months, the auto sector has been under pressure. And with the auto sales number also not helping the revival, I would say that the entire two-wheeler pack is pressured. So this particular stock is more of a trading bet than an investing bet.
Okay, what about Patel Engineering?
Yeah, what we are seeing is that the mid-cap space is buzzing quite a bit, and especially the infra, the engineering, the power sector. So Patel Engineering definitely is a very good bet after a long period of decline. The stock is showing some revival here, and it's been supported by volume, so it's a buy.
Okay, and in the ETF blending space, you have a couple of names that are standing out, Godrej Industries as well as True Alt Bioenergy. Would you buy into these two counters?
Yeah, True Alt, I would wait a bit, but then Praj definitely, because the kind of structure and the kind of news flows that are coming into play with the support from the government, it clearly indicates that there is more upside left. Yes, you may feel that the stock has run away, but I feel that there is more room on the upside.
Okay, and Delta Corp, on the face of it, the numbers don't look fantastic, but because there's a one-off in the comparable quarter a year ago, there's an other income element in that, and so that explains the 90% drop in the PAT. But would you trade this? It's buzzing in trade.
Yeah, definitely the stock is buzzing in trade, but then there is long periods of decline, which has the historical period of decline would come into play, and you would witness some profit booking here. So right now it's not a good time to invest. Maybe at lower levels, closer to the region of around 65 to 69 is where I would try to re-enter the Delta Corp.
Okay, so that's quite a few buzzing stocks that we've already taken care of. But Hiral, what stands out with the Google trends today?
You know, it's very interesting to see because it's been the power pack that has been on Google Trends focus over the last couple of days. So that tells you that's where the interest lies as well with the kind of searches that are coming in. Today you have a IRDA, interestingly, which has come in. In fact, that was the top F&O gainer in yesterday's session, is seeing profit booking today as we speak. Trent, again down in trade. We've spoken about Havells reacting to numbers as well, and a Tech Mahindra. Raja, you know, if you have to look at a IRDA or for that matter a Havells or Trent, anything that you like from this space where you have a strategy?
Yeah, what I would say is that, you know, the FMCG SPAC has been, declining for a while. And now after a long time, I can see that the FMCG sector as a whole has been showing some revival. Amongst them, Trent suffered quite a bit over the last couple of months. And now over the last few days, the strong recovery here covered by volumes and also some brokerage upgrades, we can see that the stock can actually travel further and achieve its former glory. So yes, a trend is definitely on the buy side for me.
All right, so Trent is something that we've been focusing on as one of the stories of the day. Pretty stellar performance on the Q4 results, but the outlook is where the question marks lie. And I wonder what brokerages are saying. Quite a few of them actually positive on the results, but they're wondering what happens in FY27, right, Mahima?
Right, absolutely. And I think the stock performance also, right? In the past 1 month, it's run up 30% and probably seeing profit booking on the back of that today, right? But I think, like Alex rightly mentioned, right, because of the outlook, the management has gone out and said that demand overall, the demand situation looks a little cautious because of the West Asia conflict, and that's why probably we're seeing that profit booking coming in. Now, Morgan Stanley has maintained overweight with a target price of 4,835. What they're saying is that strategy remains intact to drive share of revenues in proximate markets. Citi has hiked the target price but maintained sell on this one with a target price of 4,100. Overall, strong execution, margin sustainability is a question mark is what they're saying. They say that they continue to like Trent's business model and execution track record but await better valuation. Lastly, Jefferies has maintained hold and hiked the target price to 4,675. So a lot of these brokerages have gone ahead and hiked the target price as well but maintained the stance. What it's saying is it's a strong beat. Reported a strong quarter, helped store expansion and improving like-for-like growth is something that they've liked. But overall, commentary seemed cautious in near-term demand due to geopolitical uncertainty, which may have led to higher cost. Trent continues to stay focused on densifying key market areas, and that is something that they're liking and probably will be tracking going forward. So this is the overall view as to how things have fared for Trent and what brokerages are kind of making of it.
Okay, let's go across to our fundamental expert. We've got Ashian joining us today. Ashian, this is one of the stocks of the day, and it's had a volatile day, understandably, particularly because of the run that it's had in April so far. If you are a new investor and have failed so far to buy Trent, would you do so today, or would you give it a pass and wait for better opportunities?
Yeah, sure. So firstly, thanks for having me on the show. If you are looking at Trent, and you can broadly look at this from a larger consumer pack, there has been a sustained period where you have seen consumer companies, especially discretionary consumer companies, actually struggling. So at least when I'm kind of looking at a company like Trent, I think the run-up that you've seen in April is not as material as the fact that you've actually corrected from an 8,000 high to kind of below 4,000, and from 4,000 you've come back up to about a 4,300 level. Trent continues to be one of the best run and continue to have amongst the best execution when it comes to the organized retail space. So yes, it is definitely a very, very interesting kind of a longer term hold, because discretionary consumption and discretionary consumption demand in India is one of the clearest longer term macro trends, and Trent arguably is one of the companies that is executing the strongest out there. The weakness that you've seen over the last 2 or 3 years has actually been part of a larger weakness that you've seen across consumer discretionary names. Now, as that starts to come back, we'd actually expect some of these stocks to start to kind of come back and actually perform slightly more structurally. But it is very, very important to wait and actually see that growth revival. Yes, Trent's numbers have been strong, but a lot of that growth has been driven by store addition. Growth and same-store growth, right, and across the industry. I think that is what markets are really waiting for a larger move in the space. Now, obviously, whatever's happening with US-Iran, oil prices, the impact that's going to have on inflation and consumption demand, that is a headwind. So I think we need some clarity on US-Iran before you get structurally more positive on a counter like Trent.
So that's with regards to where Trent goes. But moving on, Pirojsha Godrej takes the helm of the Godrej Industries Group as one of its most pivotal moments. Now, my colleague Nisha Podar spoke to him about the growth levers for the group going forward. Let's listen in. The stock also seeing some smart moves today.
At the Godrej Industries Group level now, we have 6 different operating businesses in sectors as varied as real estate, FMCG. Our agri-business in and of itself is a conglomerate with 6 or 7 different verticals under it. We also have in the unlisted space some very exciting new businesses like Godrej Capital, our financial services play, which is our youngest business, just started about 5 years ago, has seen a lot of progress in that period, but we have big ambitions for that business. We also have a legacy oleochemicals business called Godrej Chemicals that we're trying to put into the direction of becoming more of a specialty chemicals player. Quite excited about the opportunities there. And lastly, we have a business called Godrej Ventures that has a film studios business, a managed office platform, as well as a core office in partnership with Godrej Properties. So these 6 businesses tapping into almost all parts of the country's economy, whether you look at the agri economy or the urban economy through real estate or the financial services opportunity. So really quite optimistic about the possibilities in each of these. We've had many notable successes in recent years. If you look at the last 5 years, cumulatively, these 6 businesses have delivered a compounded sales growth of over 20%, also a compounded earnings growth of over 20%. So we want to sustain that growth, make sure earnings per share continues to grow at over 20%, add to that an expectation that each business individually delivers a return on equity of at least 18%. Bringing together that growth and efficiency is what we think can unlock this value and take us from where we are today to this 500,000 crore aspiration. We also think there's an opportunity over that period to list a couple of additional businesses.
Those are interesting ambitions that we're talking about with that change that has happened at leadership level. Ashi, this is Hiral on this side. The stock seeing some smart moves today has cooled off from the day's highs. But with the commentary coming in, with the change of leadership happening, how are you looking at the stock? Because the stock prices in terms of Godrej, we've not seen a massive move that has come in. But do you think from here on, with the strategic changes that could happen and where valuations stand, this could be an interesting juncture?
So I think it's a little early to kind of take a call there, because what you clearly do have is new management kind of rigor. And you have a very clearly stated ambition of kind of hitting a 5 lakh crore market capitalization for the group by 2031. Now, current market capitalization would stand around 1,80,000. So there is clear kind of potential and aggression in terms of trying to create market cap. There are a number of fairly interesting businesses in the unlisted space. The only problem is at this point in time, there is fairly limited information or data available to really be able to assess how valuable some of these unlisted entities are that they are planning to kind of list going forward. But clearly there is a management which is sitting and kind of trying to unlock shareholder value, is trying to kind of increase market cap. They have kind of multiple listed group entities currently. Some of these have been performing quite well. Some of the others, however, have been underperforming. So I think a focus on kind of shareholder value creation, on trying to build out a market cap, and a clear plan on kind of getting more of the companies listed and into the listed frame clearly does seem quite appealing. That said, it's important to understand that the amount of information which is currently available is limited, and therefore while there is a lot of excitement and there is potentially a clear story here, visibility on the same and actual quantification of the same is a bit difficult. We do know the overall number of the 5 lakh crore ambition, but honestly, that's management's ambition. Actual market capitalization is determined by markets, not management's.
Regards to Godrej Industries as we speak. Let's just once again pull up a Union Bank of India because that stock is crashing in trade at the day's lowest levels. 7% is the downtick that we are seeing on this counter. Now, I think the core issue of what's going wrong over here is the deposit credit mismatch, because the widening gap that's coming in on that front, your advances have grown by around 9 to 10% on a year-on-year basis, whereas if you look at the deposit growth, that has lagged significantly at just 2.7% on a year-on-year basis. So that is one of the biggest issues that I see over here, where there is a mismatch when you talk about the deposit and credit growth, because this creates risks when it comes to liquidity tightening, and this will actually force the banks to actually rely on costlier CDs, that's the certificate of deposits or market borrowings as well, when they have to actually go fund their newer loans. Secondly, if you talk about their net interest margins, there has been intense competition as we are seeing for deposits in FY26, and that has led to higher interest payouts. So your interest margins have hovered in that 2.67 to 3% kind of range. So that is one of the other concerning areas that you should be watching out for. And the operating expense. Now, the cost to income ratio is up towards almost 49%. And this is what is signaling your lower operational efficiency at the bank's level compared to the peers. And if you talk about your overall guidance, that is going to be key from here on. The management of Union Bank of India is slated to speak shortly, but the provisions have also gone up 3 times. So these are a few of the concerning areas that I'm watching out for in terms of Union Bank of India. A quick view, Ashi, because the stock has been correcting. We are at the day's lowest levels, cuts of nearly 6 to 7% coming in on this counter.
Yeah, sure. So I think what you're seeing in Union Bank is not just Union Bank, it's something you're seeing across banks, right? A lot of banks are struggling to kind of garner deposits at the same rate at which they can lend. This is leading to overall NIM pressure, and the fact that interest rates have reduced and you have kind of advances repricing immediately because they're now kind of linked to interest rates. That is kind of causing NIM pressure and deposit pressure across the banking space. I think what you are seeing with Union Bank is you are seeing a greater level of pressure on both of these factors when it comes to Union Bank. Now, I think the way we look at this is we actually look at this as a private sector and the kind of leading private sector banks versus PSU banks. What you have seen over the last couple of years is you've had some of these leading private sector banks correct in terms of valuations, and PSU banks have actually rallied and valuations have caught up. The relative valuation gap between private sectors to PSUs are now close to an all-time lows, at least over the last decade. As you kind of, the way we kind of look at it is, as some of these pressures are kind of there in the banking system, you will see a clear gap between how private sector banks are able to deal with these pressures vis-a-vis PSU. And I think when you look at Union Bank, it is clearly evident of the same. We've had HDFC Bank, we've had ICICI Bank numbers come out. They've not had, while they have had pressures in terms of deposit growth and NIM pressures, it's not been as high, and which is why you're kind of seeing Union Bank kind of correct the way it is.
Yeah, absolutely. Ashi, I was actually looking at the P&L, and first of all, core growth of just 1%. So NIR growth of just 1% for Union Bank. And that is the issue that I saw was actually a 34% decline in the treasury operations results, right? So the profit from treasury operations down by as much as 34%, having a bearing on the PAT number as a whole. So do you think that this is something that the public sector banks as a whole are going to have to contend with because of the kind of treasury operations that they have and the way that yields have moved in the March month of the previous quarter?
So at least from our perspective, right, treasury income tends to be very volatile, and it is volatile quarter on quarter based on how interest rates have moved. So really treasury income is not something we are as concerned about. We do know that it moves up and down quite considerably. It's not something that a very strong or very weak number should lead you to change your view on that particular quarter's results, because this is a very volatile line item. What is more important is your longer term structural ability to grow your advances, protect your NIMs, and keep your costs under control. I think it's actually that, right? The fact that advances have come off a bit, you've had NIM pressure over last year, and you've had some amount of so you've had some amount of asset quality pressures. These combined have led to weakness in banking overall, and kind of like, I think slightly higher levels of weakness in PSU banks, which have been struggling a bit more. Treasury income, according to us, is not the big concern because that will be volatile based on what's happening with interest rates. It's not something that has an impact on longer term value creation or valuations.
Okay, so that's with regards to Union Bank. And, you know, treasury income has been one of the concerning areas right now in this quarter as well. But thank you, Ashish, so much for joining in. Always a pleasure to speak to you. Completely out of time. With that, it's a wrap on this edition of Trending Stocks with Alex, the team that put the show together, and myself. Lots more lined up. On the other side, we have the Union Bank management also, who will be taking the press conference, and I think that's where you will get all your answers as well. So please stay tuned to NDTV Profit. We'll have Piyush Shukla, who will be, actually looking at from NDTV's end.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he
A lackluster handover continues to keep benchmarks under pressure with risk sentiment awaiting geopolitical cues. Sensex sheds more than 750 points. Auto realty are under the most pressure as well, while pharma and energy remain resilient. And the war premium is back in the barrel. Oil is ripping higher as diplomacy stalls and tankers stay frozen at Hormuz. Brent soars past $103 a barrel as peace talk headlines fade fast with ships not moving. Meanwhile, Pirojsha Godrej, the new chairperson designate of Godrej Industries Group, unveils a new identity and vision, aims 5 lakh crore market cap by 2031 to list 2 more companies from the Godrej stable as well. That's the snippet coming in from this particular conversation. And voting for state elections underway in West Bengal and Tamil Nadu. 152 of West Bengal's 294 constituencies vote in the first phase in Tamil Nadu. All 234 seats are voting in a single-day election. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. First things first. And it's looking like a weak day coming in for Nifty as well as Sensex. When you talk about Nifty, about 180 odd point cut coming in. Sensex, that cut is actually much deeper for the Sensex. When you talk about the sectoral picture as well, it's looking like a broadly bad set of picture in terms of PSU banks, autos and Nifty Bank and Realty. Those are the sectors that are leading the losses as well. When you also talk about some of the gainers as well from within the Nifty 50 pack, in terms of sectors, you do have pharma that is in decent shape right now, and even energy that is doing well for itself, remaining resilient in a market that is otherwise tepid. Let's also talk about some of the stocks that are under a lot of pressure right now. So something like a Havells India makes it to that list, Union Bank of India as well, and we'll be getting you some more details shortly as well when it comes to that number also coming in for the earnings fine print. About a 6% knock is what the stock has taken right now, and a sharp fall that you've seen coming in the last few minutes for this particular counter. More details will be shared with you in just a little bit of time, but before we do that, quickly taking a look at some of the Nifty 50 losers as well. So SBI Life makes it to that list, Trent, Tata Motors, PV, Bajaj, Finserv, Shriram Finance, Interglobe Aviations. Those are some of the other losers as well. When you talk about the top gainers as well from within the Nifty 50 pack, something like a Dr. Reddy's is holding up quite well. Adani Enterprises, Sun Pharma, ONGC and Coal India also in decent shape. And Nestle is also continuing some of its momentum from yesterday. But, you know, when you talk about the entire commodities pack, that's also very important to take a look at right now. And in fact, let's do just that. Let's take a look at Brent oil futures as well, crude as well as WTI right now. And, you know, when you talk about the movement that you've seen coming in, it's quite the surge that you're looking at. Look at that $103 a barrel level also being breached for Brent, as you can see on your screens, about a 1.5% uptick coming in for Brent. But when you also talk about WTI, about 1.5% uptick coming in there as well. But let's also, like I mentioned, Union Bank is also in focus. Our reporter Piyush Shukla is in conversation with the manager. You know, that's something that you're looking at in terms of the importance of the stock, and it's taken a very sharp knock. The presser is currently underway. Let's tune in.
Of 18,697 crore for the year, sir. Credit cost remained at 0.23% for FY26 year as a whole and 0.16% for Q4. Return on asset at 1.36 and ROE at 18.04% for quarter, and for the year as a whole, ROA and ROE stood at 1.25 and 15.86% respectively. Next slide, please. So this slide shows the profitability parameters, sir. Operating profit, as I mentioned, for the Q4, it's 7,955. Again, this is the highest ever profit reported by the bank. Grew by 14.59% on a quarter-on-quarter basis and 3.31% on a YOY basis. Net profit again reached to 5,316 crore in Q4. Grew by 5.96% on a QOQ basis and 6.64% on a year-on-year basis. Again, this is the highest ever net profit reported by the bank. Next slide, please. This slide shows the asset quality of the bank. Both gross and net NPA stands improved to 2.82 and 0.48%, mainly driven by recoveries and upgradation. Total recovery is 13,800 crore, 13,008 crore, and controlled slippages were 8,451 crore in Q4 and 12,073 crore in FY25. So if you can correlate this, our recoveries are higher than the slippages, containing the credit cost. So PCR improved to 95.03% from 94.61% a year ago. Credit cost declined 53 basis points to 0.16% on a year-on-year basis. Slippage ratio contained at 0.85% in Q4 versus 1.13% in the corresponding quarter of the previous year. Credit growth, next slide. Yeah, this slide shows the credit growth. Advances, as I mentioned, grew by 9.74%. The major contributor in this segment is MSME, which grew by 18.75%, and retail grew by 16.75%. Corporate advances also registered a growth of 6.39%.
Alright, then there you go. So that's the commentary also coming in from the management of Union Bank. When you talk about what went wrong with the stock, of course, you do have the net interest income that is went down by quite a bit. Credit costs saw an increase of about 7 basis points, and the provisions also were quite elevated, and that's something that you're looking at. Of course, the stock has taken a sharp cut as well, about a 6% drop coming in for Union Bank. And we'll get you some more details a little later as well. But before we do that, like we were talking about oil prices, they've in fact surged. Brent is near $103 a barrel. Let's quickly take a look at those levels as well that I was mentioning for you. 1.5% uptick coming in for Brent. When you talk about WTI, about 1.5% uptick coming in for that as well. And you do have the blockade that is escalating in terms of the Middle East supply shock, and that is very much in focus. Let's also go across to Ajay Kedia, Director Kedia Advisory, standing by with some more insights right now. Mr. Kedia, thank you so much for taking time out and joining us this afternoon. First things first, I wanted to try and understand what you think about oil prices right now. Do you see the surge being sustainable from here on?
Very good afternoon. Yes, definitely, because we have seen multiple of time US and Iran were trying to go with the talk, but this is the third time we have seen the talk has been totally failed. And since 1st of March, we have seen a spike towards 120 on account of closure of Strait of Hormuz. Today, the condition is same. In fact, overall, I think scenario would be in this range only. So we expect prices would continue to hold above $100 mark. Maybe a level like 108, 110 could be there, because things are not cooling down as of now. Let's hope for next 48 hours how the things would be going. One more thing is, if this type of things will continue to be there, so it will be just like a Cold War, what we have seen in Russia-Ukraine condition. So similarly, I think energy infrastructure has been totally damaged right now, which will prevent prices to go below $90, $92 as of now for at least Q2, Q3. Post that, maybe we can see, because OPEC is now trying to leveraging wherever the production cut has been announced earlier. Now they are recovering that. So I think prices will remain on elevated levels, Yancy.
No, absolutely. And we're seeing some indications of that really happening also, Mr. Kedia. But, you know, when you talk about the higher for longer assumption for oil prices, do you think that still sustains? Because like you mentioned, some of the key infrastructure has taken quite the hit in this particular war.
So I think currently we are still under a war-like situation only. So it is very difficult to update anything, because as soon as we see the news for ceasefire, immediately there is a fall of 18-20%. And whenever there is a failed news, immediately we see a jump. But despite that, we expect for at least next couple of quarter, prices would be above $85 for Brent, and maybe possible if things are settled down, a level like 70, 75 between could be in Q4, because overall we are oversupplied as compared to the demand. But as of now, because of logistic concerns, prices are getting supported. So maybe for Q2, prices on higher side could be around 112, 115, but lower side could be 95. And slowly and steadily Q4, we can see prices moving back in the range of 70, 75. But forget, 60, 65 won't be coming in 2026.
No, absolutely, and that is something that we could just be penciling in, given that that entire base has completely been reset by the war as well, and that assumption has really drastically changed for oil prices. But let's also talk about gold as well, that's extending losses right now. Do you think that it's just a stronger dollar, or do you think that the fundamentals for gold are starting to look a little less lucrative?
See, one thing more in gold we have observed. See, in last 50 days, we have seen money was just wait and watch mode would be there. Today, in last couple of days, we have seen crypto is showing a very good strength. Today, Bitcoin has been around 78,000. That clearly shows money is now moving towards Bitcoin. Even Russia is started accepting the cryptos, and that is why we have seen focus is now shifted to Bitcoin. Coming on the gold prices, I think from 5,400 to 4,100, and now prices has rejected 4,900. As of now, dollar index is around 98.50, trying to recover. So somewhat, unless and until $5,000 doesn't break, we are bearish for gold. Maybe a level like 4,500 to 4,450 could be possible. But one thing is very much clear: in 2008, 2022, whenever this type of war or global condition comes, initially for 4-5 months, prices comes down. But after that, there could be a bigger rally. So for a short period, yes, we are expecting a bearish move towards domestic market. Also, we can see prices moving back to the level of 125, 130. But long term still intact because of de-dollarization and other factors what we have seen. Because interest rate cut would not be possible in 2026. Maybe we can see a rate hike in Q4 if elevated energy level would be there.
Right, now, absolutely, and that makes a lot of sense in terms of the way that we've been seeing things unfold as well. But Mr. Kedia, you know, when you talk about gold as well as oil, do you think that gold, it hasn't been trading as a safe haven asset for quite some time, and you've mentioned why that could be so. But going forward as well, do you think that oil is starting to pick that role up as a safe haven, that, you know, investors are rotating back to oil given that there's so much volatility?
Yeah, if we talk about crude and gold ratio, then definitely in last 1 week period, we have seen again this inversion relation has been started where crude prices are going up and gold prices are down. But that will be a tactical move only. We can see both going in hand. As of now, yes, because of uncertainty, crude prices would be on elevated level, and gold we are facing a sell-off because equity and other risky assets are under pressure. So that could be a temporary fall for gold. But yes, right now, looking to the ratio, crude and gold ratio, it should go up. That suggests crude prices would be outperforming gold.
Absolutely. And do you think that this is a bad time for buys as well when you talk about gold, given that it's extending losses? Some of the price levels, some price points could be looking attractive to investors.
So I think after a couple of years, a great rally, what we have never seen in last 10 to 15 years, definitely there should be a correction or a time correction. The gold is facing a time correction right now. Immediate support, actually, I am expecting around 4,100 at least. So I think for next couple of months, it will be a range bound or sideways to negative move for gold. This is the right time to buy, but in a piece by piece manner. Either you go with a SIP in ETFs, you can go because long term still intact, but short term, I think market would be sideways to negative.
No, absolutely, and that makes a lot of sense in terms of what you should be doing. Thank you so much for joining us with those insights as well. So there you go. If you're looking for fresh buys for gold, this is the right time, and there's a time correction that is currently playing out. So might be prudent to, really be looking at this right now in terms of the kind of roadmap that you have for gold prices going forward as well. Let's talk about raw material disruptions that weighed on Havells as well, and that's this particular counter that you're talking about in terms of what has really happened with the stock, about a 6.5% knock that you're seeing for this particular counter. And when you talk about the revenue as well, it's taken quite the sharp hit. Domestic wires business is something the management is flagging. Let's go across and listen in.
The largest segment amongst cables and wires, which is the domestic wires business, did see a revenue flattening in the fourth quarter because of the fact that there were raw material price disruptions and destocking of the channel during the first half of the quarter, and also a high base over last year. So I think overall it's a mixed performance, and we look forward to the coming year.
All right, then there you go. So that's the word coming in from the management, where they're flagging raw material disruptions being the key problem here. They, in terms of brokerages also, you do have Citi that has cut the target price for this particular counter, and that's also the commentary coming in from them. They're talking about how the growth and margin improvement from here on is actually quite important for their re-rating. Jefferies as well as maintaining a hold rating as well on this particular counter, and that's also something that you're looking at. Macquarie as well, that also has an outperform rating coming in, but they're also flagging some of these margin surprises and macro uncertainty posing, some of those headwinds as well. So that's largely what you're looking at. Jefferies, of course, maintaining an outperform rating, and that's the word coming in from the brokerage verdict as well. But let's also move on, take a look at Tech Mahindra that came out with a stellar set of numbers in the fourth quarter, backed by robust margins and uptake when it comes to the revenue. Let's listen into a slice of the conversation that we had with Mohit Joshi, CEO and MD of Tech Mahindra.
The way we see it, there is a very significant modernization opportunity. There's a very significant opportunity to deploy agentic AI to our clients. And also a lot of the R&D work we've been doing, right? For instance, building sovereign large language models, building a telco reasoning model. All of these we feel will result in significant revenue opportunities down the line. In the short term, though, there is a concern that some of the productivity asks that are being driven by the client will result in some revenue compression for the industry as a whole.
Well, then there you go. So that's AI that could be dragging the industry as a whole, and some revenue compression could be on the cards. That's the word coming in from Tech Mahindra, from the key talk point as well when it comes to IT companies, and that's AI. But let's also talk about something like a Trent that has delivered a strong set of numbers in the fourth quarter. Of course, the stock is down about 2.5%. But when you talk about the brokerage verdict, that's also quite important to take a look at it. But first, let's take a look at the earnings fine print. Mahima is standing by with that roadmap as well as the brokerage verdict.
Right, so overall, Shreyanshi, if you take a look at the earnings, definitely on a strong footing, beat estimates on all front, plus aggressive expansion is what they've done this quarter. Even in terms of, margins, it was a big beat coming in largely on account of cost optimization, plus revenue growth was better than what it did in last 2 quarters of 15% and 70% respectively. This time they've done 20% and announced, of course, bonus as well as a fundraise of 2,500 crore. Now, revenue saw an uptick of 20%, EBITDA an uptick of 40%. EBITDA margins at that 18.6% mark was set of 16% earlier, and net profit saw a growth of 30%. Operational highlights: Star Bazaar business is seeing a revamping. That is a slow growth of 6% took place. Like-for-like growth was reported in a low single-digit number, and overall emerging categories now contribute almost 21% to their overall revenues. Plus, online sales also saw an uptick of 25% and now form almost 6% of Westside's total sales. In terms of major corporate action, bonus declaration of 1:2 in that ratio, fundraise via rights issue of 2,500 crore, and recommendation of dividend of ₹6 per share. Now, what is brokerages saying? Brokerages have largely maintained their stance, but have hiked the target price by a tad bit. Morgan Stanley has given a target price of 4,835 with an overweight rating. They're saying overall, our strategy remains intact to drive share of revenues in proximate markets. Citi has maintained sell, hiked the target price to 4,100. Overall strong execution, margin stability, however, is at risk. They believe that gross margin has likely benefited from inventory provisioning reversal as well. In terms of Jefferies, they've maintained hold and hiked the target price of 4,675. What they're saying is that it's a strong beat for sure. The company reported strong Q4 helped by store expansion and improving like-for-like growth. Operating leverage benefits have also helped EBITDA grow 40% and commentary seemed cautious in terms of near-term demand, and that's something that they'll be watching out for going forward. So this is the overall view as to how things have fared for Trent. But I think it's seeing profit booking today. It's rallied almost 30% in the past 1 month on the back of its business update coming in, and probably seeing profit booking today, and also on the back of the bearish commentary that the management has given.
Absolutely, and thank you so much for putting all of that into perspective, Mahima. So there you go, profit booking as well as some little bit of softer commentary also coming in from the management that is weighing on the stock, down about 2% right now. But let's also talk about another counter that is down quite a bit, Union Bank, that is in focus. The stock is down about 7% 6% right now. And you do have the core income that is declining, provisions rising. Let's also go across to Shivam, who's standing by with some more details in terms of what is really happening with this particular counter and what really went wrong.
Well, yes, Union Bank has posted a weak set of numbers for Q4 FY26. And let's look at the 5 top reasons what went wrong in this result. Starting with the net interest income, it has gone down by 1% to stand at 9,400 odd crores, which has resulted in a decline in net interest margin. by 12 basis point on quarter basis. If we look at the total provisions, that has also increased by 3 times to 1055 crores, and provision for NPAs has also surged 80% to 423 crores. Credit cost has also seen an increase of 7 basis point on quarter basis, and other income has aided in profit, but that includes income from investments and treasuries, which are non-core operating income. So that's why that's not also a reason for a good set of numbers. So return on asset has also saw a marginal uptick, and asset quality has improved, but on profitability and provisions front, bank hasn't done that well and remains a concern.
No, absolutely, and that concern is also being reflected when it comes to the stock price. You can see that 6% knock also coming in for this particular counter. Thank you so much, Shima, for also putting it into perspective. Let's also talk about one more counter that is really in focus, which is Tech Mahindra, and we've already, talked about it just a tad bit. Let's take a look at the earnings fine print very quickly and take a look at what the brokerages, of course, had to say. You've heard out what the management then had to say about the AI roadmap as well, but let's go across and listen in to Jasmeet, who's standing by with that entire earnings fine print.
Well, thank you for that. We'll look at Tech Mahindra as an entire company. It has done pretty well with what the expectation was in terms of overall revenue and EBIT growth. And even the margin expansion, we're estimating an uptick of 24 BPS, but the margin up moved, showing at 70 BPS, showing the confidence in the overall long-term guidance. Well, the management also restates that they are on track to achieve the 15% target by FY27, and they remain on track of that as well. If we look at the other key details, we make a note that company records its second consecutive quarter of hitting that $1 billion mark in terms of deal win. And in this particular year, company records deal win worth rupees 3.8 billion, making the highest ever deal win for the company. If we look at the overall CC growth, it comes in at 0.6%, which remains positive despite macro uncertainties. We're talking about the key numbers. The numbers have shown positive upmove in terms of revenue and EBIT, while margins are expanded, but net profit saw a one-time hit coming in from the subcontracting and the forex charges, which might get mellowed in the coming quarter. Now, if you look at the overall brokerages, they have remained conservative in this particular counter. Something like a City on Tech Mahindra, they have maintained sell with a target price of 1275. What they see the overall quarter was largely in line. They also see the valuations are already poisoned in the entire positivity of the particular counter. The next one is Jefferies on Tech Mahindra. They have maintained underperformance, but they have hiked the target price to 1220 from earlier 1180. Now, what they say is they have seen the revenues are in line with the estimates, while the profits are missed due to the forex losses. They also make a note lastly saying that they raise the EPS at 2 to 3% on the back of that INR depreciation.
No, absolutely, and that makes a lot of sense in terms of Tech Mahindra's earnings fine print as well, Jasmeet. But the reason why we're talking about this is because the entire IT pack is very much in focus. You're looking at Infosys as well, and you do have the poll that we should be looking at in terms of the key things to watch out for here. Jasmeet, let's go through the what is being penciled in terms of the earnings as well as the dividend front.
Well, for Infosys, the key crucial thing to watch out is the overall guidance in this particular quarter. But before we get in the guidance and the commentary, what we're expecting, let's quickly understand the key numbers. Well, we are estimating the revenue to be flattish and say an uptick of slightly 0.4%. In terms of the key EBIT margin, expected to rise to 0.98%, while the overall margin is expected to rise by 9 BPS points. Now, in terms of net profit, that's an interesting one. It's expected to rise by 11%. This is on the back of that low base we saw in the previous quarter. It is one-time labor code. Now, in terms of the key highlights to be watched out in this particular result is the overall CC growth. While brokerages are penciling in CC growth between -1 to -0.2%, but it's something to watch out of how it has panned out this quarter. And this particular year, the company has not reported even a single negative CC growth. So Q4 becomes a crucial to watch out for. Apart from that, the update on the acquisition of Versent as well as other ramp-ups which they had done in the previous quarter will be in focus. We also would like to focus on the overall large deal win, which are expected to be in the range of 2.5 to 3 odd billion this quarter versus 4.8 in the previous quarter. Now, in terms of the guidance, which is a key crucial to watch out for, if you look at the overall brokerages, Morgan Stanley and HSBC penciling in a guidance of roughly 2 to 4 odd % versus 3 to 3.5 in the previous quarter. They expect the overall guidance band to increase. While secondly, Morgan Stanley expects the FY27 margin outlook to be between 20 to 22% for this particular quarter, which is something to watch out for. All in all, we expect a muted result, but the guidance become a key crucial to watch out.
Absolutely, and thank you so much, Jasmeet, for joining us with that update also coming in terms of what to pencil in when it comes to something like an Infosys. Of course, IT is in focus on the back of it being down, yet again, not, like it was yesterday. But let's also take a look at the pharma pack that is in focus. It's remaining quite resilient, and it's already seen a volatile April, though. Initially, you did have this underperforming the broader markets before staging a sharp comeback. It's quite an interesting story. In fact, Varsha is standing by with just that update there.
Well, yes, we are seeing a good rally in overall sector. Now, this is after the underperformance that we have seen in April. Let's see what Nifty Pharma has done versus all the index. If you see, the Nifty 50 is up almost 7% in April. Nifty Pharma is up only 4%, while Nifty Auto is up 7%. Nifty Bank, if you see, 10%. Nifty Realty, 19%. So there's a sharp underperformance that Pharma has given to the street. But let's see why Pharma lagged in April, because there were no major earning upgrades or no positive surprises as such. Also, US pricing pressure narrative resurfaced. So, and also if you see, April saw profit booking at higher valuation levels because 25 was a good year for Pharma. And this money was rotated into banks, PSUs, infra and capital goods, and hence Pharma stayed out of the favor during this rotation phase. But now what changed today? Of course, there was a short covering after recent weakness, number one. Now money is actually rotating into Pharma as a defensive hedge during the volatility that we are seeing. Talking about the key performers, you have Dr. Reddy's. The stock is among the top contributors to Nifty Pharma today. If you see, this is because analysts are expecting a potentially a generic semaglutide launch in Canada for Dr. Reddy, and Dr. Reddy will have a first mover advantage for that. And for Cipla, if you see, Cipla is also buzzing in trade. This is because of they got approval for albuterol sulfate, which treats bronchospasm, and this has almost if you see, the market is estimated at $1.5 billion. Even Aurobindo is also buzzing now. This is because the 800 crore buyback at rupees 1,475 per share opened today. And also, this spillover is also expected to other stocks also. You have Lupin, Piramal Pharma is also buzzing because of optimism spillover across the sector stocks. So overall, if you see, Shreyansi, the pharma is actually coming back and people are buying to the defensive sector.
No, absolutely, and thank you so much, Varsha, for joining us with that update there as well. So it's really staging a comeback, and that's something that you can very clearly see being reflected today as well, with that being the top sectoral gainer as well. But with that, we're completely out of time on this edition of the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open.
MSMEs who have exposure towards the export segment, do you see second and third round order impact coming on those, and do you feel going ahead there could be in Q1 or Q2 some sort of stress building? And if you could share the SMA 1 or 2 moment as well, has there been some increase? How are MSMEs doing on that front?
So your first question was basically related to that how we see the coming years or coming period. So it is very clear. Let me just share with you. This is the third time I am meeting you in this hall. So we are very clear that, September when we met, I think 28th or 29th October, we made it clear that yes, then we met in the month of January, 13th, I think 13th or 14th. And the growth you have seen, if you take the growth, it is more than 6.5% in the half year. So actually whatsoever result you are seeing, it is on 6 months we are muted, 6 months we have tried to make it actually. So you see it is a more than industry growth if you ask me. So almost if you take 7%, 7 into straight away if you take 6.5, so 6 into 4, quarter into 4, annualize if you analyze it is almost 24%. So we will continue with that growth of, that industry which is growing even better than that. So very clear. Even our CASA growth is much better than the total. I think retail and CASA, which is we have grown in the 6 months very fast in that. Now coming to the second part, which you asked about this, so Government of India has come and Reserve Bank of India has also come on the exporters particularly. So in that, I think I'll give you the data. We have already so 306 applications came through Jan Samad portal. In this 210 are already sanctioned and 180 are already disbursed. And it has related to, that 20% of the total limit. I am saying that one. And coming to the Reserve Bank of India trade relief measures, so there were eligible applicants were 522, in which we actually talked to all, and then 59 people have applied. And that PC extension is for 35 application, post shipment for 3 application, and FITL for 40. So in total 170 and 21 and 49. So we are in discussion with them and we are disposing that as per the eligibility.
But going ahead, do you see any stress coming up? These are export credit measures. There's no moratorium as such on loan payments, right? Do you see any?
Until now we have not seen any, there is that is stable, but yes, there sometimes we hear about Morbi cluster, which is in talk. So basically where the energy intensive sectors are there, because there was delay in gas, commercial gas, so maybe these sectors which were more dependency on the energy side. And one more thing which we have observed is that import which was happening. So that import which was happening, so the goods which were coming, so because of this Hormuz Strait and all, so actually it was elongated by 35 to 45 days. So when we had a lot of discussion with our exporter, importers and all, we came to know about this, and I think this trade relief measures has helped them a lot. So up till now we have not seen as such any very critical things coming into the MSME sectors, but then the companies which are in the cement and all this where, so if they are having a cash flow, then certainly the MSMEs are attached to them. But up till now we have not seen this relief measures has helped them. But yes, that import remittances, inward remittances, we have seen a decline. So I think this is one point because importers are also there. So number of counts or maybe the total volume which is coming as a import remittances or inward remittances, it has fallen. I think around by 5,000 crore or something like that.
Well, that was the management of Union Bank. Now, the stock tanked nearly 6% post coming out with these numbers. Now, not a great set of numbers given the fact that the companies, if you look at the GNPA ratios, that improved both on a sequential basis, GNPA and NNPA. But the net interest income, that was down around 1% on a YY basis, close to 9,400. NIMs also decreased on a sequential basis. But moving on from one earnings to other set of earnings, SBI Life also came out with these numbers yesterday. My colleague Sharad Dubey caught up with the management. Let's listen into what they had to say.
strong numbers coming in, especially if I look at the performance, at least in the value of new business and other operational parameters as well. Just wanted to get your view on it, how things were, because last time we spoke, Q3 numbers were on the stronger side. So this year ends on a strong note.
We are happy that the company has been able to deliver as per the guidance that we had provided at the start of the financial year, both on the top line as well as on the bottom line. The top line growth at 13% is above the industry average and also above the private industry average. So that is a satisfying feature. We are also happy that we have been able to provide the VONB margin also at 27.4%, which is within the guidance that we had provided for 26 to 28%.
And talking about the AP numbers, though it has moderated a bit compared to your other numbers, but it's still better than peers. Is there a little bit of concern going ahead into this new year, or will you maintain this growth which was there?
For the current financial year, that is FY27, we are maintaining the guidance of around 14% growth on the IRP basis and also on the APE basis. There was a little softness in the fourth quarter of the year for the entire industry, in fact for the entire financial segment.
And why was this? And why was this?
We think that this is the result of the geopolitical events that are happening. A lot of turmoil is going on all over the world, and the financial markets all over the world are affected by these events. We are also a part of that only.
Okay, so of course this is an impact which of course is not under your control, but just wanted to understand a little bit more about the product mix over here. Going forward, how will SBI Life's product mix move around, and are we looking at any higher yielding products?
During last 2 to 3 years, we have been focusing on growth with profitability. We are ensuring that our product lineup in all these segments, all these lines of business, that is protection segment, non-par segment, participating segment, is good. And our product launches in last couple of years have been very strong in these products. These products have been very well received by the market. The customer response is good, and that has resulted in good growth rate of these line of businesses in overall product mix. What that has resulted in is a drop in the overall ULIP contribution to the product mix from 70% to 66%. And going forward also, we will continue to work on this product mix in a positive manner.
And Jingran sir, apart from this, the OPEX costs seem to be on the higher side. Is this because of a little bit of seasonality at play, you're putting in some more marketing cost, or is it that's something that we can see that putting a little bit of pressure in Q1?
One major bump in the operating costs is coming from the input tax credit. You are aware that GST was waived in the month of September. And that has resulted in a very good growth phase for the entire insurance industry. But on the cost front, that has put a little bit of pressure.
And will this continue, sir, in the first quarter?
This will have some effect in the first quarter and up to the month of September also. But we are happy that with our product mix, with our cost optimization initiatives, we have been able to largely mitigate this effect.
And Jingran sir, let's talk about the overall FY27 targets, which you have kept. I remember in third quarter you had stated that Sharad, you need to wait 1 quarter. So I'm waiting now. That quarter is over. What are the FY27 targets which has been set?
For FY27, we are looking at a top line growth on the IRP front at 14%. We have been growing at a little above the industry average, and we will ensure that going forward in FY27 also we maintain the same trend. On the margin front, we continue to believe that we will be able to deliver in the same range of 26 to 28% in the coming year, I mean the current year also.
Well, that was SBI Life, giving a growth outlook for next 2 to 3 years. But moving on, Tinar Rubber is one such stock which is in focus. Now, this company is Asia's largest recyclers of end-of-life tires. Well, they do have, Vision 2028 also, wherein they're expecting revenue target of around 1,000 crores by FY28. Profitability goal, if I were to talk about, EBITDA margin expected above 18% and ROC is expected about 30%. A lot of triggers actually working for this company, new businesses, international operations, and FY26 and 27 are expected to perform better. But to speak more about the outlook ahead for next 2 to 3 years, I'm here joined by Mr. Gaurav Sekhri, who is Managing Director at Tinar. Mr. Sekhri, hello and welcome at NDTV Profit. Pleasure to have you. Let me start off with the current ongoing situation of Middle East war that we are going through. Just wanted to understand the trends of raw material prices and impact of this war on your company.
Sure. Hi, good afternoon, and thank you for having me on your show. I think the Middle East crisis, has impacted everyone, and in a small or large way. In our case, we haven't felt the impact of it in Q4, and we are hoping that, and like the rest of the world, that this should now resolve the crisis in the Middle East, and things should normalize. So I hope we can get past this whole impact of Middle East relatively unscathed. But there has been some impact on higher freight rates on us, but our customers have been very understanding so far, and we've not had so much difficulty in passing on the price increase to the customers as of now.
So if you could just give us some understanding on what percentage of price increase you have actually managed to pass on to your customers?
We are, we've been targeting between 5 and 10%, and depending on different customers, different product lines, we are achieving that to some extent.
And what would be the hit on your financials, not in Q4 at least, but in Q1, if any?
I don't expect any major impact of the Middle East situation on us. Like I said, things are hopefully stabilizing now and normalizing now. We have Q4, it has not impacted us at all. And in Q1, with the price increases that we are getting on our product lines, I expect the impact to be minimal.
And sir, sticking to the financials, you were expecting almost 535 to 540 crores of revenue in FY26. If that is to be taken, Q4 should be the highest quarter for you, ranging around 145 to 150 crore when it comes to revenue. Are you on track when it comes to FY26 with guided EBITDA margins?
Very much so. I'm very happy to share, very much so. Q4 was our highest top line quarter, and what you said, it's fairly accurate. It will be slightly better than that.
Okay, slightly better than what you have guided. Got that view. Also, sir, for FY27, you're expecting around 700 odd crores of revenue. But considering the Middle East crisis, but just now you said you're not seeing much impact of Middle East war. So could investors expect that 700 odd crore of revenue in FY27?
We fully expect it to be. We've just finished our sort of granular business planning session for FY27. We fully expect to be very close to 700. We've got our capex that we had done on the new plant in Varale in Mumbai. That is, the trials have already begun. We expect the production to stabilize during Q1, and we should start seeing some sales coming from this expansion towards the end of Q1, and then of course consolidate in Q2.
And so what about margins? Currently, you're hovering around 15 to 16% of EBITDA margins. Where will they go in FY26 and FY27?
We continue to maintain that we will see this number, this EBITDA margin to be met. There are, in fact, some benefits of operational efficiency which are beginning to kick in. But we also have some new projects underway which will take, which are expenses are always forward-ended. So overall, I think 15 to 16% is reasonable to expect.
Right. Also, if you could just give us some idea on the international business, what is the kind of capex plan that you have? What is the kind of growth that you're anticipating, say, over the next 2 to 3 years?
Sure. So, we almost 3 years ago decided to take our learnings outside India and implement them in countries which have a very similar cost structure and some other macro factors to which appeal to us. So we set up our first plant in Oman, which is operating in a stable manner. Some impact has been there on Oman due to this war. Fortunately, Oman has very good relations with all Middle Eastern countries, and it is not impacted so badly. But there is some disruption in shipping, and our customers within GCC also are seeing some reduction in their business, which also impacts us. So Oman has been our first initiative, stable, doing well. We are happy with where it is. I don't expect any major capex in Oman. South Africa, we began work a year ago. We are continuing to stabilize the operations in South Africa. I think we are another 6 months away. We are right now losing some money in our South Africa operations, but it's a very calibrated, very well thought out decision to go there, and our investment exposure is fairly small. Of course, the intention is to build a full recycling plant there by next year. But we remain very, very optimistic on South Africa.
Right. On that note, South Africa was expected to break even by Q1 FY27. Is that still the case?
I hope so. I think towards the end of Q1, we should start seeing that number. This, again, the Middle East war has not helped us because freight rates from South Africa have shot up, which impact the business there somewhat. But all the macro fundamentals for South Africa remain solid, and we remain committed to continue to grow there.
Right. Well, thank you so much, Mr. Sekhri, for answering all the questions, and it was a pleasure speaking to you. Thank you so much.
Likewise, pleasure for me as well. All the best. Thank you.
Thank you. Well, this was Tinar outlining the growth outlook, expecting the FY26 to end around by 540 odd crores and 700 odd crores for FY27. But with that, let us also invite the guest for our show, Tapan Joshi, who's a research analyst at CA-Tapan.in. Well, Tapan, welcome at NDTV Profit. You heard the management of Tinar expecting good growth for FY26 and FY27. What's your view on that counter?
Yes, if you see over the years, this company has done quite well now, both in terms of revenues and profitability. And the way they told that the expansion is also underway, even capacity expansion, they are going to do it in next few years. Margin improvement, of course, will be the focus, and value added products, hopefully they are going to scale up. The only thing is raw material pressure will be there. So there will be indirect pressure on the margin. And overall EBITDA margin around 10% is a little bit low, but I think government infra and again, overall the demand is quite good. And if you see this year was not so great last quarter and other last 3-4 quarters, but I think things will be improving. The stock has already come down from the top. So I think at this valuation, it looks okay. And if someone has a long-term horizon, of course, they can hold this stock for long.
Right. Now let's get in Mahima to understand what's been buzzing in the hosiery stocks like Lux Industries, Rupa or Dollar Industries. Mahima, is it because of the summer season? Usually we see a pickup in demand in these companies, right?
Probably that's the reason, right, Somit, because we've seen an uptick for all of these counters in the past 1 month, and today also they're flying in trade. If you take a look at today's performance, Lux Industries is locked in upper circuit at the 10% mark. Dollar Industries also gaining on 20% higher, and so is Rupa and Company, which is trading around 12% higher. Now, in terms of 1 month gain, all of these counters, Lux has seen a gain of 88%, Rupa has seen a gain of 38%, and Dollar Industries has seen a gain of 30-odd%. Now, the reasons behind this could be the probably summer sales growth posing a good momentum and good volume growth coming in. Expectations could be that, and on the back of that, they are buzzing. Recent price hikes in innerwear happened in southern markets, and probably that will follow through in other markets also. That will augur for top line, and that could also be one of the reasons to why these are flying in trade. Now, if we take a look at the sales growth and profit growth for all of these companies and the valuations as well, the sales growth in the terms of past 3 years CAGR, Lux has hardly grown at 4% CAGR. Rupa has seen a degrowth, in fact, of 3-year CAGR, stands at minus 6 odd percent, and Dollar Industries has seen a CAGR growth of around 8 odd percent. Profit growth for 2 out of the 3 companies is negative, because Lux Industries saw profit CAGR growth of 4%. But at the same time, Rupa did see a degrowth of 24% and dollar at a degrowth of 16 odd percent. So this, considering this growth metrics and as compared to where this stands in terms of valuations, is very divided, because Lux Industries P stands at 47 times, Rupa at 19 times, and Dollar Industries at 17 times. Though Rupa and dollar are cheaper as compared to where Lux Industries stands, but still valuations are looking expensive and overall growth is not justifying that. So this is the overall view of where hosiery stocks go.
Tapan, how are you looking at these counters? Valuations expensive and growth not justifying. Do you concur with that view?
Yeah, fully. No, because if you see, of course, a very big jump in all these stocks. But no, from last few years, these stocks are not doing well, as Mahima already told about the sales and profitability. Again, there is a raw material price pressure and lot many other issues already from the management side also there. And they lost the mojo over the last few years. Now, as the stock has already gone up, all this stock has gone up. I think at this level, it looks expensive. Again, we have to see whether the quarter to quarter, they are able to give the good profitability or not. Then only better to enter. Only one good instance does not mean that we should enter this stock. So I wait for 1 or 2 quarter more consistent performance, then only better to enter.
Right. Well, moving on, time to dive into the F&O market setup and the cues shaping in trade today. Let's bring in Parth for more details.
Thanks a lot, Varsha. So let's have a look at the BSE F&O cues that are shaping up today, starting with the Sensex heat map. So Sensex had a gap down opening today, and since morning it has been trading in the same range. Among the top gainers, we have stocks like Sun Pharma and Bharat Electricals, while in the top losers, we have stocks like HDFC Bank and Mahindra and Mahindra. Now let's have a look at the F&O in the F&O segment, starting with the long build-up. We are seeing stocks like Jio Financial and Policy Bazaar Fintech, both of which are up over 3.5% in trade today. Moving towards the short covering, we have Dr. Reddy's Labs and Oracle Financial Services Software. Dr. Reddy's is up around 9.7%, while Oracle is up over 8%. Oracle posted its Q4 numbers yesterday, in which the company saw a very strong jump in margins. Now moving on to the long unwinding, we have stocks like Havells and Union Bank, both of which again have reported their Q4 numbers, both of which are down over 6% in trade today. And lastly, moving on to the short build-up, we have SBI Life Insurance and TVS Motors, both of which are seeing some downside today. So these are the major F&O snapshot for today, and moving on with the show.
Well, thank you so much, Parth, for all the details. Moving on, let's pull up Camlin Fine Sciences. Let's see what that stock is doing in trade. Its stock is up almost 9 to 10%. There you go, 16% in return that the stock has given today. But let's see what are the key triggers when it comes to this counter. One is, of course, the vanillin volume guidance. Q4 FY26 volumes are, if you see, are expected around 600 to 700 tons. FY27 vanillin guidance and geographic mix, if I were to talk about 4,000 metric tons of guidance which has been given by the company, and FY27 geographic mix is expected around 60% from US and 40% from Europe. When it comes to blends, this is the core growth engine for the company, which delivered double-digit growth in Q3 despite operational disruption in Brazil. But FY27 growth for blends is expected at 25%. FY27 revenue guidance, which has been given by the company, stand at around 2,200 crores, and FY28 is expected to end at 2,400 crores. Well, gross margin, if you see, is expected at 46 to 47%, and EBITDA margin for FY27 is expected at 12 to 14%. So overall, a good performance is expected by this company in FY27. And lastly, on the acquisitions, though, Winpai contributed almost 13 crore in Q3, which is expected to grow 40 to 50% in FY27. But Tapan, what is your view when it comes to Camlin Fine Sciences? A lot of triggers working in this company, but what would you advise to investors considering the valuation and the huge run-up which we saw today?
See, the already stock has gone up, but if you see last few quarters, the stock has not been performing. The stock is almost down a lot from the top, and you can almost 63% down from all-time high. And the problem is that revenue and profitability has not been consistent overall, and that is the problem with most of these sector stock. I think the whatever updates you have given are quite encouraging, but we have to see whether it is reflected in the P&L or not. Because the problem with all this type of stock, they may spark a lot, then suddenly they'll fizzle out, and that is where you get trapped. And this stocks is not giving that type of sign that now suddenly there is a turnaround. We have to see that whether turnaround is happening for next 1 or 2 quarters, their results, and if better that then only you should take a position. And so from my side, we will still be avoid.
Well, thank you, Tapan. Thank you for joining us and giving us your views on the stocks that we discussed. Well, moving on to EFC. That stock has been buzzing in trade. It's up around 5%. And in the last 7 trading sessions, the stock has gained in 5 out of them. What could be the potential reason behind this up move? Let's get in Shivam with more details.
Well, yes, the stock, if we talk about the movement, of the stock, the stock has seen a positive returns in last 5 sessions out of the 7 sessions, and also the stock has gained around 18% in last 3 weeks. The stock has achieved its biggest advance since October 9 last year, and the trading volume of the stock has also tripled on intraday basis. Let's look at the company's business. So company is in business of leasing the office space and interior designing and manufacturing of furnitures. Looking at the clientele, few of the prominent clients include Tech Mahindra, Mahindra Finance, Amazon, Car Trade, Godrej and Flipkart. Now the company was in the news recently due to the 90% occupancy rate in record time at the Sprint Business Center, which is their commercial workspace at Pune, and this property has been leased out to multinational companies and large enterprises, and the company believes that this will strengthen its premium tenant portfolio. Looking at the valuations against peer, EPCI is currently trading at 3.7x of EV by EBITDA value, and Smart Co-working Space is currently trading at 6.41 times, and WeWork is trading at 5.88. So on valuations fronts also, the company is trading at lower valuations, and the company is yet to report their Q4 FY26 earnings. But if you look at the Q3 FY26 earnings, the revenue has gone up by 52% to 270 crores. The EBITDA has gone up by 20% to 112 crores, and the PAT has also seen a positive growth of 55% on YY basis.
Okay. Well, thank you, Shivam, for that extensive research coming in on EFC. Well, potential increase in occupancy ratio could be the reason behind this up move that we are seeing when it comes to this counter. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.